This might take up to 15 seconds. It's been more than 15 seconds. Yo.
Oh my God, chat's moving so fast.
Yo,
can you guys hear us? Can't see you guys.
Yeah, you guys need to lock the fuck in.
Can you hear us?
Yo. Yeah, I'm sure they can see us now. How was everyone's Christmas, boys? How has everyone's holidays been so far? What's good, fam?
Yeah, guys, make sure to join on your computer.
Notebook ready. Let's go. Let's go. What is that?
People are saying it's laggy.
Muted. I can't hear.
Yo, spam W's in the chat if you can hear us. Spam W's in the chat if you can hear us.
Can you guys hear us?
Muted. Okay, hold up.
Go to the mic.
Shit. No. Braden said you can hear you. Oh, it's just a little delayed. W's.
Okay. All right, we're good.
We are live, boys. We are live. Join up.
Someone said load up the shuffle, bro. You're funny. You're funny.
I hate when Instagram does that.
Oh, how many of you guys are unprofitable little shits?
Join the fuck up. Live boot camp is starting now, boys.
Smile for the picture.
You guys are about to get sauce for 3 hours straight. This is gonna be insane. We're gonna start up in around 10 minutes.
10 minutes. No, we're starting in 5 minutes.
No,
max.
we'll start up in 5 minutes.
Yo, if you're dead ass spamming 6-7 in the big 25, you're a lost cause. Genuinely, it's over, bro. It is over. Patty, spread your cheeks. I got you. At the end of this, I actually will be spreading my cheeks. So hopefully you guys stay for that, because that's going to be a big one.
Yeah, he's getting oiled up by the end of this.
But anyways, while we wait to actually get started, pretty much what we're going to be doing throughout this is, I mean, whether you're a beginner or just already pretty experienced in trading, regardless, I'm sure you still have a lot that you can take away from this. We'll start off, I guess, obviously with a nice introduction, going over a lot of like the psychological stuff and like how to overcome that stuff, as well as then some model breakdowns, going pretty in depth into just concepts, and that'll go from like beginner all the way to like pretty experienced. So you'll get the whole thing, right? If you're new to trading, you'll take away a lot from this, and even if you're experienced, you should be able to take away something. So yeah, make sure you got your notebooks out and shit, and all that good stuff. We'll get started in 3 minutes here, so just vibe up for now. Is there any way to fucking put slow chat on or something?
Yeah, bro, this is crazy. I can't read anything.
Enter Steaky message.
Steaky message. Oh my God, is this how Kyson that feels, bro? Because I can't read shit. I'm slow. All right, so we'll rip it like that, then rip it like that. Yeah, bro, this is laggy, dude.
That's fun. Go back to stream.
Nice. What?
Never do that again. Not scary. That was good for shorts. What do you mean, buddy? Oh, my LR.
Soon, bro, soon. Who's in those though?
Are you guys live on Twitch? Does this look like Twitch to you, brother? Does this look like Twitch? How long is this boot camp? Honestly, bro, like the beginner stuff, the psychology stuff, we're probably gonna be an hour and a half-ish, and then I'm gonna do like a Q&A for an hour and a half. So it's really like kind of as long as you guys want it to be. For those of you who do want to just ask a bunch of questions and stuff, you can stay as long as you want, pretty much. So everyone's saying same trade.
Bro.
We're not playing. Bro, I've told Blake 1,000 times to download Arc Raiders. He hasn't done it, bro. He hasn't done it.
Why is my keyboard like not working? I have to do this.
Okay, just click the fucking.
No, I mean, I guess, yeah. Wait. Okay. Bro, that's so annoying. W long. It's over. Whoever just said that.
W long.
No, they're tripping. They're tripping hard.
Tripping. All right, run up the presentation.
Hold up, all right.
Somebody record this shit, please. You record it. No, I'm just kidding.
Dude, where'd it go? I'm talking. How many of you guys in here are beginners versus intermediate? I want to get a little.
Yeah, if you guys had to rank your experience level on a scale of 1 to 10, where would you say you are?
This is all going to be recorded, by the way, guys.
Beginner, intermediate, 6 months. Mid, 7, 4, 5, 3, -1, beginner. -1 is crazy, bro. Yeah, just click that. Or just click that.
Nah, yeah, blah, blah, blah. Okay, cool. And then, yeah, I'll bring that up.
All right. Put in that bitch.
Let's do it. So how do I bring this over? Just do it like this. Up a chat, like I'll do it like this. Yeah.
Yeah, just screen share.
Who is ready for some sauce? Spam some W's in the chat if you guys are ready for some sauce. Spam some dubs. Yeah.
Oh, we're in the bottom right corner. I don't like that. I want to be in the top right. All right, whatever. Just leave me there. It's not that serious.
But then if I go like this.
No,
I just want to see if I.
Whoa!
No, but they can't. But then they can't see that.
Can't see what? It's fine.
No, then I have to share a different screen.
For what?
Share the entire screen. Like that.
Betty. What's the difference?
So then so I can switch over to the section in the folder.
All right. What is going on, guys? Welcome to the PB Trading Live Pathway to Profitability Bootcamp by Patty and Blake. God, I feel like I'm in college all over again. My intro to entrepreneurship class or something. But anyways, guys, let's clear the air. I know you're sick of all these fake trading gurus promising you a dream. That's practically what all of social media is filled for. Everyone's just telling you can get rich quick overnight. But, we want to break the stigma and just keep it real with you guys, keep it transparent. So that's why we're doing this. First, let's show you some payout proof. So a big reason that we're doing this pathway to profitability is for those of you who are obviously trying to get kicked off with prop firms and start getting paid out and just rinsing these prop firms. And that's like a large goal for us is to teach you how to get payouts. We've gotten, I don't even know, bro. We could have probably uploaded hundreds. But as you become a better and better trader and you make more money with prop firms, eventually you do get the ability to create your own live account and trade solely off your own capital. which is, I'd say, the end goal, right? I mean, I think Blake can agree too. We both nowadays just only trade on a live account, but we went through the whole prop firm thing and just absolutely try to milk as much as possible from every prop firm you can think of. I mean, Top Step, Tradeify, Alpha, Apex, TPT, literally almost every single prop firm that is reputable. We've probably gotten paid out with them.
100%. This is back then when Top Step was actually nice with their consistency rules, bro. You
when
can just
Top Step was peak.
Yeah, bro. You could just rip like 20K payouts, 12K payouts. It was so nice. But yeah, these are pretty much a good majority of our payouts. Just want to show you guys that first to clear the air. Okay.
Let's go ahead and present again. But yeah, I mean, you guys, everyone's capable of getting paid out, dude. It's not hard. And ultimately, you know, Blake has said before, trading is inherently scalable. If you can pay yourself out 1K on one account, you can pay yourself out 5K if you're just copy trading. It's really not that hard. No. But with that out of the way, on this live bootcamp, what you're going to discover is our 70% win rate trading strategy. So simple, even your grandma could learn it. And I'm so serious. You know, a lot of people think, like, how could you possibly make money trading with a strategy so simple? And truthfully, you know, the thing is, everyone online loves to overcomplicate shit. People think that overcomplicating stuff and using more concepts makes it better, but that's not how it works. So also, we're going to teach you how you can rewire your brain to overcome your emotional and revenge trading. It's huge. And how hundreds of regular people like ourselves have applied our models to achieve consistent profitability. All right. If you get one payout, but then you stop paying yourself out for 3 months, you can't call yourself out profitable. You got to be able to do it over and over. So, little question before we get into these things. If you can stick to the promises and deliver all this education value for free, would it be unreasonable that at the end of this, we give you the opportunity to work with us more directly and speed up your pathway to profitability? You let us know. Yes, no.
Spam some yes or no's in the chat. Yes.
I like men, you know, say something, but
we're a little behind.
Yeah, no, it's all good.
No, I'm saying chat.
Yeah. Chat is like
we got
10 years early.
We got so much to learn.
They're living in the past, bro. We're in the future. All right.
Hey.
A little cheat code. We're giving away 5 free funded accounts with Alpha Futures. So hopefully, you know, one of you who's listening to this right now wins. I might have rigged it for my cousins. Not kidding. I did do that once a year ago. So how are we picking winners? Most engaged participants in this boot camp, right? But that doesn't mean spamming stupid ass shit. Please, like, take this seriously. People are here to learn. So we want you guys to actually lock in. And yeah, just take notes, bro. Be engaged. And that's what matters. Now let's get started. But why listen to us? We're just two weird kids on the internet after all. I'd say Blake is considerably weirder than me. Probably lower IQ than me.
No.
But the point is, you know, we're not really different than anybody else. I mean, I practically just watch anime, play guitar, and goon all day. I don't do much and play Arc Raiders. Blake, I don't know. He's just he doesn't do anything cool. No. Blake has nothing interesting going for himself. No, so you guys are probably more interesting than Blake, to be honest.
All right, let's move on.
Okay, sorry. Yeah, sorry about that. I didn't mean it.
No, you're good, bro. You're good.
My bad. And just like we addressed, there are tons of bad actors in this space, which is the whole reason Blake and I even got into, I guess, the whole social media side of things to begin with. You know, bro, I personally hate scrolling through trading social media. I'm going to be completely honest. I don't do it often. But anyways, that's why we're here. So even though we just showed you our payout proof, you still need more, and that's completely reasonable to think. And, you know, we agree with you guys. So rather than us trying to explain why we're legit, we'll show you what others have to say. I'm pretty sure you guys have seen online, whether it's YouTube, TikTok, Instagram, whatever, tons of people have leaked our courses. But that's really just all old videos from our Discord from years ago. And the point is, why would they put it out there if it wasn't legit to begin with? Everyone wants to get a piece of our sauce. Whoa. That could be rephrased.
Yo, do not clip that.
And honestly, I love seeing those old videos that people leak. I think it's pretty wholesome to just watch back the stuff I made a couple years ago. And yeah, I mean, we don't mind that, of course. But I'm sure you guys see the comment sections on TikToks too, people talking about our strategy and all this stuff. And I feel like, you know, we've gained some good traction and a lot of people trade it nowadays, which is sick. But yeah, regarding the leaked content, it's only about 10% of our paid content that we put out probably in total, and it's outdated, but it still gets thousands of views, right? People post this on YouTube and you can see that some people get 3.5K views, 1K views, 700, 4K, 9.9K, 24K. Bro, that's just random people who just run up a random YouTube account. Like they just create an account just to post an old video of ours and it fucking rips. And I think that's pretty cool, to be honest. And yeah, I mean, hopefully you get the point now. So is that all the proof you have though? Well, not necessarily, right? On top of the payouts, on top of the YouTube videos, on top of everything, there's literally just proof that it's not even like asked for. It's just completely random. Sometimes we'll be scrolling on our For You page and we'll see people talking about our strategy, which this was really cool to say. I mean, really cool to see. This made Blake and I's day for sure. We saw someone post a TikTok talking about, you know, who really, or like what's a good strategy out there. And the top comment was that the PB method was the best strategy, I guess. And that was really cool. You know, we're always trying to teach as many people as possible. And despite, you know, a lot of bullshit, I feel like with my YouTube getting kind of screwed over in the last month, it's kind of held us back from reaching more people, but we're going to come back harder than ever as always. And we're going to keep trying to push to teach everyone. And yeah, overall, just help everyone. So I'm sure you guys have also seen videos like this, top day traders and the top mentors in the game. Usually we get ranked there, right? Pretty sick. But what have you guys actually done though, is probably what you're thinking. We got invited to the New York Stock Exchange. I don't know how much I can flex this because the day after I actually got banned from the New York Stock Exchange, but we're not going to get into that.
We're not getting into that.
You know, it was fun while we were there. I might have goofed around a bit. And it happens, you know, just take it's some good dad lore to say the least.
For sure. We'll talk in a couple of years, you guys will hear that story.
When we don't get a lawsuit, we'll talk about it. But yeah, you know, we have 1,000+ 5-star reviews on WAP, which is really cool. Great to see. Of course, you can't win everybody over. Some people, you know, whether it's a small bunch, not everyone's going to be satisfied, but that's part of the game. And disclaimer, most of the testimonials and results we showed throughout this bootcamp are outliers. In no way, shape, or form are we saying you're going to be achieving these exact same results. It's really important that you guys understand that everyone's pathway and I guess journey is different. I hate when people compare themselves to others. That shit makes me so frustrated, bro. Like there's for real people out there who, you know, maybe in the first 3 months they start getting a payout, and some people out there who take 2 years. It doesn't matter, right? It only really counts once you guys actually decide to take it seriously and lock in. And that's when the time, I guess, your journey really starts. But here's one of our students as well, Riley Both, and he started I guess, pop off a good amount in TikTok and Instagram, and he's been killing it. And before PB, he was trading for 1 year. He was unprofitable. He was stuck in school, working, strategy hopping, mentor hopping, and just overall emotional trading. And then 3 months into learning with us, he had a 40K month, which was sick. And, you know, Riley's story was really cool. He ended up buying his dream car and all this stuff. And it's sick just seeing him on social media still killing it. So yeah, kudos to bro. And now he's helping other people too. So that's awesome as well. Here's a survey, which I think is actually incredible. And this is directly from our students, right? We sent out a survey asking just, you know, everyone in our mentorship, have you gotten a payout? And this was towards people who have joined either the day of or up to 12 weeks, right? So either today or up to 4 months. Wait, or 3 months. Sorry, 3 months.
Yeah.
And from the responses, 21.6% of people responded that they have gotten a payout. I don't think you understand how insane that is. That's nearly a 1 in 4 or 1 in 3 students have gotten a payout within the 12 weeks that they were in our program. Which is insane. And that's including people who had just joined, right? So if you were to like, I guess, average it out to only people who've been there 4 to 12 weeks, it'd probably be even higher, probably close to 30, 40, even 50% maybe. Our testimonials channel, I guess, you know, we can, whatever. That was, we were going to show the testimonial channel, but it's not that serious. And
no, I just got that.
And then here's our win rate over many months of backtesting data, backtesting trading previous markets to see how our strategy performs. An important way to just refine a strategy is backtesting it. So, I mean, after this, we can go into that. Yeah. Because
we'll show you guys how to download FX Replay and all that stuff. So I don't want to get into the FX Replay now, but that's going to be near the end of the bootcamp. We're going to get into that.
Yeah. But yeah, point being, we're not just another pair of furus, bro. We're just actually here to try to help you. So yeah, we were fully immersed in the game of trading. Blake, fun fact, he started trading at the age of 16, and at 18 years old, he already had over 100K in payouts, which was insane. Never did I think that him, out of all people, would be successful in trading. But you know what? life proves me wrong.
That was a good time. I remember calling both Pat and his brother Richie and telling them about that, and I was just in my fucking dorm room. So that was a pretty surreal moment. But yeah, obviously there's bigger goals to be achieving. But at 18, it was definitely a big accomplishment for sure. Yeah, I did this while being in school, while I was working at Carrot Express. As you can see, I was 130 pounds wet. So yeah, this was basically the Cannon event though. Pat saw me trading at the beach. We were on a trip in the Dominican Republic. And he basically asked me, like, yo, Blake, what are you doing? And I was like, I just made a band trading. And he was like, well, how did you do that? And I was like, day trading. And he was like, well, I thought day trading was a scam. Can I copy your trades? That was the first question he asked me. And that's pretty much the first question everyone asked me. They think it's just a get rich quick scheme. They think they can just copy my trades and I'll let them do it. And I said, no, but I'll teach you. I'll teach you everything I know and everything that you need to know to become profitable. And rather than copying my trades, he became self-sufficient and consistently profitable in like under a year or about a year. Yeah. But yeah, it was absolutely insane. And this is a crazy flick.
Yo, oh my God. All right, chill. But yeah, I mean, also while I was becoming profitable and just more and more consistent, even still, bro, like I felt like I sort of had imposter syndrome. I was like, is this really going to work? Is this something I'm actually capable of doing? All this stuff. And I still decided to work a job, which honestly I ended up quitting after 6 weeks. I also took a year off of school, but I tried everything, right? Like I was, becoming more and more profitable, I guess, while working, while being in school. And then ultimately I had to pull the trigger and all these things because it was holding me back. But yeah, we only bring that up because we know that's a lot of your guys' positions. You're either in school or you're working a job, but you know what it is. You can always figure it out. You can always do it. So some common myth is that, I can't learn how to trade while working or being in school.
Yeah. Yeah. So again, guys, this is a common myth, right? I can't learn how to trade while working or being in school. This is something that both me and Pat were doing. So we know the exact position that you're in if you're in this position, right? But the reality is you can learn how to trade while working and attending school. You just need to work hard. Simply, you just need to be grinding, right? Another myth is that copying other trades is the quickest way to get rich, which is not true. It's a quick way to make easy money. I'll say that. But long term, you will not have that skill. And in the long run, you will be losing more money than you make. Okay. But yeah, the reality is that leads to long-term dependency, and becoming self-sufficient trader is where real freedom comes from. Yep.
Yeah. I mean, just to quickly say, bro, the signaling other people and thinking that that's the way to become profitable is just not true at all. You need to build self-sufficiency. You need to build independence. And throughout that, you build your own discretion and just become a great trader overall.
Hondo Peasky. So our promise to you guys is that we will give you all the tools necessary to fish for yourself, rather than you guys just being dependent on another person to give you that fish, right? And this is the same methodology, I guess, I taught Patrick, right? Where I told him, like, I'll teach you how to fish, but I'm not going to give you the fish, right? So I want you guys to all say the following out loud to yourself, or write it in chat. I will become a self-sufficient and consistently profitable trader. All right.
Or if you have a journal, write it down, bro.
Yeah.
Journaling shit is key.
But right now, start it off.
But yeah, no, I truly can't emphasize the power of this. I know you guys think it's fucking corny or stupid to say these things to yourself, but really, if you repeat these positive affirmations to yourself every single day, your brain starts to believe it, and you start to actually, take action in relation to those affirmations. 100%. So that's how life works.
Sick. Now type. Well, they're already kind of like typing this.
They're good.
All right. So the hopelessness of trading. We get how lonely the journey feels. Listen, guys, I traded on my own for about a year and a half before I turned profitable, and it was extremely, extremely lonely. Right? Profitability feels like a light at the end of the tunnel that never gets closer, no matter how hard you work. Right? I know a lot of you guys are probably trading on your own right now, and it's definitely a scary path because you don't have anyone like in front of you to actually show you that it's possible. Like Patrick, like he saw my success in front of him, right? So he saw that light at the end of the tunnel. Like, he's like, well, if Blake's able to do it, I should be able to do it too, right? So that's kind of what we want you guys to get that community from, is from us.
Yeah, and I think that's also really important, bro. Like if you look at someone who's lifestyle you're not really inspired by, or your morals don't really align and all this shit, you're not going to want to learn from them. But Blake was always someone that we had the same interests, bro. Like at the time, we both loved fucking music, instruments, skateboarding, all this shit. And so we had a lot of alignment in life. And that's why when I saw him doing it, I was like, okay, like this would actually make sense that I learned. But yeah, bro, I know how easy it is to go on social media and see someone who all they do is fucking flex like diamond out watches and stuff. And you're like, why the fuck would I learn from some dude like this?
But yeah, it's time for you guys to end that cycle, and it's time for you guys to get your breakthrough. Okay. That's why you're here live. And if you stay here to the end of this boot camp, we will make for damn sure that you have obliterated your psychological roadblocks. You started to pick up on the concepts to our 70% win rate strategy. We're going to get into that in a second. And most importantly, we're going to give you that roadmap to a consistent profitability ASAP so you can achieve the freedom that you've always known that you deserve. Okay, guys? So let's get into it. I don't have enough time, right? This is one of the biggest excuses I see unprofitable traders make. Here's our methods to how we crack consistent profitability while both being students and working jobs. We both went through this, right? But before we get into our methods, I want to kind of describe person A and person B, right? Person A is the person that you might be right now, right? You might not be waking up for the market on time. You might be stuck in bed. You might not be going to the gym, right? Versus person B is going after their goals every single day. And I want you guys to become that person B, okay? So type person B in the chat if this is who you're trying to become and what you're trying to go after right now.
And I just want to say something quickly, and I've told this to a lot of people, but imagine you just committed to one thing 110% every day for a year. You guys underestimate how much your life can change in a year if you just go fully into one thing. And if you can genuinely say that you've done that, well, you know what? Like, you know, shout out you, but I guarantee you that 99.9% of people in this chat right now have never actually gone 110% into something disciplinedly, following your rules every day and doing exactly what you have to be doing for just a year. It's not fucking easy, but that's the type of that's what you need to do to be successful.
Yep. 100%. And if you're on this live bootcamp in the first place, probably because you have less freedom than you like, which is what we are going to change with trading, right? You need to work harder now so that you can have the freedom to work less in the future. With trading, it's a thing where you have to put in a shit ton of time at the start, right? You need to be backtesting a lot, live trading a lot. That's going to take a lot of your time. But in the end, it is the most rewarding thing. Trading, I'm trading for, 2-3 hours a day max. I'm, journaling for maybe 30 minutes max. It's not taking up a lot of time in my day. And then after that, I have the freedom to do whatever the fuck I want in my day, right? If I want to go golf, go to the gym.
I don't even trade 2 hours a day, bro. I trade an hour and a half max.
You don't really need that, right? But yeah, that's why trading is such an amazing profession to have, right? So if you need to work overtime now, guys, do it. It is going to be worth it in the long run. Okay.
I also want to say, bro, this kind of wraps back to you can always find time, dude. While I was in school, I would literally go to sleep at 9 p.m., wake up at 2 a.m. to trade London session just because I wanted to get better because I couldn't trade New York session. And if I did have a class where I could trade New York session, I would sit in the back of class trading. There's always a way. There's always a way.
Yeah. So quick note, guys, we do just trade futures. For anyone wondering, we trade NASDAQ futures and ES futures charts. Okay. And the best time to catch up with our model is New York AM session. So this is going to be from 9:30 to 11 to around 11 a.m. Eastern. Sometimes if price action tends to be a little bit worse, can go up until 12 p.m. But it's generally from 9:30 a.m. to 11 a.m. Eastern, right? That's the bread and butter times. And we're just focused on time management for now. So we'll get more on this later. But this is the first method that Patty was briefly touching on. And I'll rewind now back to 5 years ago today, me, right? I was working at Care Express. Again, I set up alerts on my phone. So when charts would hit certain levels, I'll get notified while I'm work. And then I would go to the bathroom and then trade on my phone, right? So this was a little bit crazy, right? But it was what I needed to do, right? To take a trade. If I could set up a time where I'm able to trade, where I don't have to actually be working, I would do that as well. So I would try to schedule my work hours around trading. That's also something I would do. Same thing with school, right? But basically just try to get your work done ahead of time. So that way, when you come into work or school, you can duck off to the bathroom for longer, right? And watch your trades play out and execute. So our method number 2 is, let's say you can't do that because you are maybe going to school. You're maybe in high school, right? Like we said, 9:30 to 11 is usually when the best setups happen, but you don't have to trade at that same time every single day. There are different sessions, right? So New York AM session, 9:30 to 11. There's also PM session, which is from 1 p.m. to 4 p.m. I trade PM session for a while. Same thing as Pat trading London session for a while. I would do that. So this is definitely possible, guys. It's not to say that it's going to be like the best price action, the best volatility, but is it possible? Yes. Now, some tips I would tell you guys. First off, though, Asia session is definitely the worst. This is because price action barely moves, right? You're trading NASDAQ futures and a US index during Asia session, not going to be the best price action, right? But the most important thing is to stick with one session. That's what I just want you guys to know. Stick with one session because you'll get used to how price moves during that session. I don't want you guys trading New York AM and then you guys trading London and then you trading Asia session and then every single session, because you're just not going to get you're not going to understand basically how price moves during that session.
It's also important to understand like less is more with trading, bro. You don't need to trade every single session. That's not how you make more money. It's by mastering one thing.
Exactly. Which is why, and you'll win more consistently. So let's give the first example. Okay. You get off at school every day around 4 or 5 p.m. If that's you, if this is your person, then trade London session. Okay. Do that. And let's say you don't get off school or work every day until around 4 or 5, then trade Asia or London. Right. But the rule of ones, like Pat was saying, is have one mentor, basically one model and one session. Just stick with that every single day. And that's how you'll become profitable, is literally being consistent with everything, right? And we're going to teach you the model and we're going to teach you everything that you need to know, okay? But yeah, pick your method. Trade New York AM session while at work. Trade London or Asia session off work. Or if you're blessed and you can trade New York AM session at home, like we do, just do that. But time management continued. Once you pick your method, you need to come up with a routine, okay? Extremely important that you guys have a routine. For example, my routine, I wake up at around 8 a.m., go outside, get some sun in my eyes, I shower, and then I get on the charts around 9:15, and then I trade from 9:30 to 11. After that, hit the gym. Very simple routine, very simple input that I have every single day, right? But it's really important that you guys just stick to that. So because trading, just like outside the charts, you need to have it be consistent, right? So then you can keep your trading grounded and your execution's actually clean, okay?
Yeah, some of you motherfuckers be waking up like 3 minutes before market open with your crusty ass eyes. You can't even see the damn charts.
No, so cooked. So pick 1 to 3 things around your trading routine. For example, like you trade in the morning, maybe you hit the gym, maybe you meditate, maybe you journal. I do all those 3 things, right? Or if you trade while at work, maybe just close your eyes for 10 seconds before looking at the charts, meditate a little bit, get yourself in the right headspace, right? But yeah, that's pretty much that, guys. I think that's a good introduction. Who's ready to learn some sauce? Who's ready to learn some of the concepts behind our trading strategy? Let's get into it. But first off, guys, I want to start off with this disclaimer that we are going to start with the basic concepts. Okay. So if you're a complete beginner, this is the time for you to open up them ears, because we're going to teach you literally everything you need to know about trading for the start. And then of course, for everyone that's more intermediate, and later on, we're going to get into our actual model.
Yeah, I would say if you're a bit more advanced, you feel like, and you have a good understanding of like foundational stuff, like maybe spend some time just journaling, writing your takeaways from what you've heard so far. And then in like 15 minutes, we're going to get into like really more advanced stuff. But we're going to start off with obviously the basic stuff right now for people who are just trying to get into trading.
Yeah, but it's definitely still good, guys, to still like reiterate on the concepts and still like refresh on them, because masters never don't do the basics, right? That's pretty much it though. Before we get into the concepts, how are we doing? How are we guys feeling? Are you guys feeling ready? Put some W's in the chat if you guys are feeling ready. Let's see it. Let's see it.
I mean, yeah, you can listen or write it down, right? It's completely up to you. We're going to start off with foundational stuff, market structure, just some basics. But yeah, it never hurts to get a refresher. I would say maybe we see some of the basics a bit different from you, and you kind of want to hear them out, right?
Quick recap though. We've covered how to trade while in school and working. We covered basic IC concepts. And yeah. Now let's get into it. Sorry, we haven't covered basic IC concepts. I'm also in a position right now. So, all right, let's get into it though. First things first. I see a lot of W's in the chat, so let's do it. All right, guys. First concept I want to cover. This is for the beginners, complete beginners. If you guys have never looked at a chart before in your life, I'm going to be going over candlesticks. All right, I'm going to try to spend around 10 minutes on each concept. Candlesticks. Okay, so what is candlesticks? All right, this is just how the market is viewed, right, through opening prices through closes. This is a green candlestick here, right? This is what you'll typically see if you open up a chart for the first time. And then this is a red candlestick right here. There it is. Bearish or bullish, okay? Now, a little analogy, right? For a lot of you guys that are beginners here, I want you guys to understand basically what this means. The green candles, right? We have an opening price right here at the low. We have a close right here at the high. Okay, so the bodies tell where price has opened and closed, and the wicks tell where price has been. Okay, so let's give a little analogy. For example, let's just draw out a road. Okay, let's draw out a road right here. And I'm going to use the analogy of a car. Okay, let's find a car in these emojis. Car right here. Okay, so a candlestick shows where the car has been and then where the car has stopped and where the car has, started off on its journey, right? So it started off right here. This is where the car started its journey right there. Then the car decided to move, let's say lower. Okay, moved lower and lower, and then it arrived here. And then it also went all the way up here. Ooh, look at that. Up here, and then the car just keeps going. Control-C, Control-V. Up there, up there. But then the car finished its journey where? Right here. Finished its journey right here. Okay, so this is an example of, what price action is basically doing, right? Where price action is moving from low to high, and it's showing where price has been in different time intervals. And we can do the same analogy for the red candlesticks here, right? Where price, and I'm just going to write this down so you guys really remember. A green candlestick opens at the bottom of the body, closes at the top. And then a red candlestick opens at the top of the body, closes at the bottom. Okay, so what does this look like? Opens here, closes here, right? And it's also been up here, right? So the start of its journey for the car would be here, right? Do you guys all basically understand this? This is pretty basic stuff, but it's always good to know this, because if you don't understand this now, then you're never going to understand market structure. You're never going to understand the concepts, and you will definitely not understand the model. All right. Basic open lows and open highs is super important. Put some W's in the chat if you guys understand this. And then we can move on to some real chart examples. Okay. And yes, this is our Lamborghini. Yes. Put some manifestations in there. I love that. Cool. Yes, I understand. W's. All right. So now let's show you guys what this looks like on an actual chart. Okay. Hopefully this trade hits. That'll be cute. All right. If we just look at the daily time frame, right? Let's look at the daily time frame here. Start on the daily. This daily time frame is a representation of price action in this whole entire day of Monday so far, right? Let's do Friday, right? Because that candle actually closed, right? So price opened where? Here. This is your true day open. Opening starts at Sunday at 6 p.m. Eastern. I want you guys to remember that. Sunday, 6 p.m. Eastern is where the opening bell of price is. Okay. This is your true day open is what they like to call it. Price has reached this level. It has also reached this level, but it's closed right here. Not a lot of price action was happening on this day because it was the day after Christmas, not like the best price action. But if we just look now on the lower time frame, since price is fractal, right? Let's say we go on the 4 hour, you can see that this is the whole entire price action of the day, right? Where we had opening price right here. This is your open. Price then traded higher, hitting this high. This is the highest point it went. This is the lowest point it went. And then it closed where? There, right? So that is really, really important. I want you guys to note that. Sorry, it's right here. And then the close was here. So you can also do this on every other time frame, guys. Not only the daily, you can do this on the 1 hour, 1 hour candles, right? Let's use this 1 hour candle, for example, right? Or let's use a bullish candle. What's like a nice bullish candle? I'll just use this one, right? Where price action opened where? Here. This is at 6 a.m. Eastern, right? This is on the 1 hour time frame. Opened here. We then traded higher. This is the highest point in which price went. This is the lowest point in which price went. And then the close was here. Okay, so remember, we open at the low, at the body of the bottom here. We open up higher. We hit this high. We go lower, and this is the lowest point we went, right? And then you can go on like the 5-minute time frame, and you can see that this 1 hour from 6 a.m. all the way to 7 a.m., this is all the price action that happened within the 6 a.m. candle, right? So it's really important that you guys understand that. Basic concepts, right? But that pretty much covers the candlesticks. I mean, do you guys chilling on this? You think we can move on to now market structure? Again, really simple, but I mean, again, guys, you can do this on like the 5-minute time frame. Look at the 5-minute, right? This is 8:30 a.m. Eastern. Price opened here. We had a low here. This is the lowest point in which price went. This is the highest point in which price went. And then we closed here. And then you can see on the 1-minute time frame, what do we do in that 5 minutes? We did exactly that, right? We have an open. This is the highest point in which price went, lowest point in which price went, and then we closed here. So this is our range from 8:30 to 8:35. You guys see that? How price is fractal. What happens on one time frame is happening on every single time frame. You guys understand basic. What's a candlestick? Right. So again, guys, that's I mean, that guy's probably trolling, but that's what a candlestick is, right? It just makes up what price action is. You can also, there's lines. You can look at price like this on line charts also. But yeah, let's move on to market structure now. Okay. That was around 6 minutes. Let's move on. So I'm now going to move on to market structure. Okay. Market structure. Concept number 2 that you need to know, okay? Market structure is made up of just trends, right? So bullish structure and then there's bearish structure, okay? That's really important that you guys understand. Bullish structure is made up of this, right? Let me just go on the lower time frame actually, so it's easier to draw. Market structure. Market structure. Bullish structure is made up of this. Looks like this, right? You guys all see how that's what bullish structure looks like, and then bearish structure looks like this, okay? Really simple, okay? This is what it looks like. We have an uptrend that looks like this, and we have a downtrend that looks like this. This is bullish, this is bearish, okay? How do you identify what bullish structure looks like? Well, we have a series of lows, and we have a high, then we have a higher low, then we have a higher high. These 1, 2, 3, 4 things is what makes up a bullish structure, okay? We have a low, we have a high, we have a higher low, we have a higher high. And then continuously, higher low, higher high, higher low, higher high. This is what bullish structure looks like, right? Really simple. But again, you guys need to understand this. Again, if you don't understand this now, you are going to be cooked because market structure on the higher time frame, and you need to be aligning that with the lower time frame and with our models. Because without this market structure, you will have no idea how to actually implement the models, okay? So we're going to get into the models in a second. Just make sure you guys have this down, okay? And then bearish structure, what does that look like? Bearish looks like this. We have low, we have a high. We have a lower high, lower low, and that's what makes that bearish structure, right? Low, high, lower low, lower high, right? This is a lower high than this one. This is a lower low from this one, right? Simple, I know, but you need to understand this, okay? Very beautiful. Just simple, but remember, guys, the trend is your friend. So if you see this structure happening on the higher time frame, remember that you want to be aligning your lower time frame trades with that. Do not get manipulated out just because you see lower time frame bearish structure. You might think, oh my God, we might be bearish, but no, always zoom out. Trend is your friend. It sounds corny, but it's true. Okay. Let's take a look now at some structure on the, let's just go in replay mode. Sorry guys, in a trade right now, but let's just go in replay mode. What's going on? Bro. Okay, log out. I guess I'll log out. Let's take a look at some structure on the lower time frame, right? All right, let's go on like the 4 hour actually. That'd be nice. What does this structure look like, guys? I want you guys to say in the chat first off what this structure looks like so far. From right here to right here, what does this look like? Bullish or bearish? Bullish or bearish in the chat? Bullish, right? And why is this bullish? Right? Why is this bullish? Because we have a low, we then have a high, we then have a higher low, higher low, higher high, higher low, higher high, higher high, higher low, right? And that is what is indicative of bullish structure. Okay. Very nice. Very nice. Now I want to show you guys an example of what bearish structure looks like on the higher time frame. Let's go back even more here. What does bearish structure on the higher time frame look like? We have a high. We then have a low. We then have what? A lower high, a lower low, lower high, lower low. Also, guys, if you guys are confused on looking at this on like candlesticks, you can also just pull up a line chart, and it makes it a lot easier so you guys can actually understand like what the trend is looking like. I feel like a lot of people find this to be easier. I know when I was first starting out, I was like looking at it on line charts to actually understand if we were bullish or bearish. You can see bullish, right? It's not that hard to understand, but I want you guys to just really dial this in before we get to moving on to liquidity and the other advanced concepts. Okay. Now, how do we know when structure has actually shifted, right? If we are looking at a chart like this, how do we know when structure has shifted? So we know structure has shifted when we get a body closure, right, below the last down close or the last candle right here, right? The last higher low in a bullish trend. This is a shift in structure, and we are now going to start a bearish trend. All right. And we'll align this later on with other key levels, but this is really important to know that once we get a closure through this is when we start a bearish trend. And then the same thing the other way, right? If we start going up here, or sorry, down here, and we want to go back up, what does price need to do in order to have a market structure shift? We need to have a body closure above that last lower high. And once we do that, we get a market structure shift. And then we get a change in character. We get a change of delivery, a change in trend, right? All those words, but it's really just a market structure shift at the end of the day. Nice. Break a structure, market shift, all that stuff. Same idea, right? Where we are just changing trend, changing our delivery in price. Cool? How are we feeling, guys? How are we feeling? A little heat check. W's in the chat if we're feeling good. And then from there, we can move on to liquidity. I think we're on pretty good. We're moving around like 5 minutes of concept. Don't you? All right. So like looking at this on a line chart, right? Boom. Look at that change in trend we get right there. Look at that market structure shift we get right there. And then we start changing trend. Then look at this. Boom. We start changing trend now to the downside. Very simple, right? That's the low. That's the high. Then we get a closure below the low. And then, of course, looking at this on actual candles for me is easier. But yeah, super nice. But yeah, understanding bullish versus bearish, guys, is really, really important on the higher time frame. I can't emphasize enough that the trend is your friend. And we'll get into that when we talk about the models. And maybe I'll do like a trade recap, and we'll recap some of the trades that I've taken past couple months, and just really we'll dive into that in a bit. But definitely make sure to understand this first. Let's move on though. Let's move on to liquidity. Okay. Everyone seems like they're chilling. Guys, also please don't spam the chat. I see your questions. Please don't spam your chat. I don't understand low time frame market structure. Yeah, if you don't understand low time frame market structure, just make sure that your higher time frame is aligned. That's the main thing. If the higher time frame is indicative of bearish structure, and then try to align the lower time frame with that. If you see lower time frame, for example, start going up, what does this mean? It's most likely a manipulation move, right? Because price is going to be bearish on the higher time frame. So this is just a retrace on the higher time frame to then go lower, right? So anytime you see bullish lower time frame structure and a higher time frame bearish trend, try to be onside that higher time frame bearish trend and just understand this is simply manipulation. Okay? Cool. let's move on to now the concept of liquidity. Okay, so what we've covered so far is candlesticks. You guys understand your open, highs, lows, closes. You understand what makes up a candlestick. What else do we cover? Market structure, right? Yes, market structure shift and breaking structure is the same thing. You understand market structure. So now we're going to talk about liquidity, okay? What makes up a swing high and swing low is really, really important for you guys to understand liquidity, okay? So what makes up a swing high? Let's just draw it out here. A swing high, boom, 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 is made up of, not the best at drawing. Please don't roast me, guys. A little thicker. There we go. Swing high is made up of a low, a high, and then a lower low. Very, very simple. A high, a lower high, and then another lower high, right? This is what makes up a swing high, okay? It's a 3-candle pattern formation, okay? Very, very important that you guys understand this. It doesn't matter. This candle could also be red. It doesn't matter the color of the candle. I know I'm going to get a lot of questions on that. Doesn't matter the color, okay? It can just be literally looking like this. And this is what makes up a liquidity pool, right? This is a buy-side liquidity pool. Why is this called buy-side liquidity, you may ask? Well, to understand this, we have to first understand the psychology of traders, okay? So the psychology of traders means what? Well, if we're just looking at this chart, right? And let's say someone's trying to take a short position from here. Where is the logical place that the majority of traders are going to be putting their stop losses? Well, most likely at this high right here, right? Most likely at this buy side liquidity right here because they see this as a protected high, right? So they'll put it right here. Now, why is this a bad stop loss? Well, because the market makers are going to trade back to this high and grab this liquidity to then trade in the opposite direction. So liquidity, you guys just got to think about it like it's basically fuel for the next move, right? The market is constantly generating liquidity and it's constantly taking out this liquidity to actually move the market, right? So whenever you see swing highs like this, and then you see raids on liquidity like this, boom, 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 the market is just grabbing this to then do what? To then go lower, right? So that's what a liquidity sweep is, and really, really simple. And then, of course, what makes up a swing low? Same exact thing. We have a low, right? And then we have 2 lower lows on every side. Yes. You are always liquidity because you do not know how to place your stop losses, which we are going to get into in a bit, okay? But this is your sell side liquidity. Now, why are these called buy sides and sell side liquidity pools? What does that even mean? Well, when we're in that short position, right, what do you have to put, right? Well, you have to put a sell market order right here, right? You are betting that the market is going to go down, and you're placing sell contracts right here. You then also have to place buy contracts right here to buy yourself back out if you get stopped out. And then you have to place buy limits down here. So there is buy side liquidity resting here because there's buy stops resting here. There's a lot of money right here, right? So where's that money emoji? Oh, somewhere. Let's just act like this is the money emoji. Okay. No. All right, whatever. There's a lot of liquidity resting here, right? Because a lot of people's stop losses are resting here. So you do not want to be liquidity. Same thing here, right? You're taking a long, you're betting that the market is going to go up, right? So what are you doing? You're putting a buy position, you're having buy contracts going, right? And you have a sell stop here, right? Because you need to sell back out your position if you do get stopped out. And then you have a sell limit right here, right? To actually get yourself out of that position if you do end up making money. Okay. Very, very simple. This is what liquidity is. Not too complicated. I'm going to get into some chart examples now, but you guys all understand this briefly. Any questions? So marking out my liquidity pools, I'll use the 15-minute time frame and above. Sometimes even the 5-minute time frame, honestly. Yeah. Cool. All right, so let's move on. I'm going to show you guys what liquidity is, okay? So liquidity and liquidity grabs, right? We just kind of went over this, but it rests within swing highs and swing lows. prominent swing highs and swing lows. If you guys are complete beginners, I want you guys to be paying attention to this on like the 15-minute time frame and above, right? So if we just look at this chart, for example, right, we have a swing high resting right here. Why is this a swing high? Well, we have that lower low. We have, the high, the lower high, and then the lower high right here. This makes up a swing high. And there's a lot of liquidity resting right here. We also have a liquidity grab right here, right? We take out this sell side liquidity right here because we have a low, the lower low, we have the lower high, sell side liquidity grab, and price likes to trade from liquidity to other liquidity pools, right? So from this liquidity getting taken, we like to go to this liquidity, right? And boom, and then we get this liquidity grab, and then you guys see the pattern here, right? So that's just what I want you guys to start doing, is just marking out your prominent swing highs and swing lows, just looking at the 50-minute time frame above and being like, oh, this is buy side liquidity, and looking like, oh, this is sell side liquidity. And something else to note, guys, is that sell side liquidity and buy side liquidity really comes down to just basics of understanding, like the basics of trading, right? Meaning support and resistance, right? So support is the theory that if we trade to this area here, right, and we bounce from this area, that we will continue to do that over and over and over again, because price has shown that we've done it once, right? And this is by the books trading, right? And this is really wrong, right? Because a lot of people, and they trade very objectively in the sense that they'll just put a stop loss here, take profit up here, and think that because we keep bouncing in this area, we can have a safe stop loss here, which is just not the case, right? We end up trading back towards this, and then usually it's just ends up getting ran, right? This is your sell side liquidity run. And this ends up happening over and over again, right? You see it right here. We have relative equal lows, which is really, really important that you guys understand this. We have a low, we have a relative equal low, and they think, oh, just because we bounced off this once, it's going to happen again, right? So they'll put a buy position, let's say like here, stop loss, where? Like here. And then this is literally just going to be a liquidity run, right? This is the wrong side of the market. You do not want to be onside this. You want to be instead targeting this sell side liquidity, right? So it's really important that you guys understand this. Sell side liquidity. Because this is, but yeah, you guys all understand this? Put some W's in the chat if you guys understand this. Yes. So we're going to talk about how, and when buy side, sell side liquidity and when that's going to reverse and all that stuff. When we get into our models and when we talk about fair value gaps, everything is going to make sense. But it's really just good that you guys understand the basics of ITC trading first, and then we'll move on to everything else. Okay. But we'll start combining concepts in a bit, but I want you guys to first just understand, like, what is buy side liquidity? What is sell side liquidity? Oh, it's just made up of swing highs and swing lows. Cool. Like, this is your buy side liquidity. This is your sell side liquidity, right? Buy side liquidity is here. Buy side liquidity is here. Buy side liquidity is also here. You see, we have runs on buy side liquidity up here, right? Price then does what? Trade from here to then take out what? These lows here. All these lows are sell side liquidity pools, right? These relative equal lows on relative equal lows. And when you see these failure swings, this is another important thing to know. It's called failure swings, or, relative equal lows and highs, same thing. But it's basically when we have this structure form and this low doesn't take out this previous low. So there's going to be a lot of liquidity resting here, and here. When we have all of these stop losses here, right? Because people are in positions and they're having contracts here. People are in more buy positions, they're having more contracts here. More buy positions, having more contracts here. What does this mean? Stop losses are all resting here. This is a lot of money here. Okay. Yeah.
Yeah. So, I mean, just a little bit more on this whole liquidity thing. I'm obviously letting Blake do his thing right now. But right, like Blake went over buy side, sell side, all that stuff. The most important thing I want you guys to take away, though, is when you saw Blake mark out the highs and lows, or the buy side and the sell side, he's marking out the major highs and lows. And so you'll realize that the better you get at trading and the more you start to understand these concepts, you start to pick up on what's noise and what's not noise, right? So if I wanted to take shorts, for example, I'm not just going to take a short off like a random run on liquidity, this first level right here. Ideally, I would want to see the major high get taken, which would be up here, because I know that this is going to give me the strongest reaction once price trades up to here. And then ideally shorts from here would be better, right? Because this is the major buy side. And same thing with sell side liquidity, right? So like, let's say I wanted to take longs and price, eventually trades back down to here and takes out this first low. This isn't going to give me the same level of probability as it would if I went all the way down and took out this major low here, right? Because this is my major sell side. So it's really important. And I see this happen a lot with beginners. You guys will just mark out every single fucking level, right? Every single damn high, every single low. And that's just going to distract you from what's important. Focus on the major swing highs and swing lows. And those are going to be the key levels where once price actually takes those major swing lows or major swing highs, that's when you're going to get the true reactions, right? And you can see the same thing with something like this here, right? Price doesn't really care after running this first low or this second low. But once it takes out this major swing low down here, now we start getting a bit of a stronger reaction and a push higher. And it's always going to it's going to work like that. So yeah, I mean, right? Like you see the same thing here. What's going to be the major swing low? In this case, we have this significant swing low down here and this significant swing high up here. And so what we notice with the market is that, right, all these other lows you can mark out here, yeah, they might be sell side, but it's not going to be significant. And so once price comes down all the way to here and takes out the major sell side, that's when we see the true reactions. And those are the trades we want to be taking if we're going to take counter trend trades. Same thing applies to here. Yes, there is a ton of liquidity buy side throughout this level, but when is price going to react? When we take out the major buy side. And then that's when we get these strong sell-offs. And notice how the pattern continues. Then we take out this significant sell side and then we go all the way back up, right? So hopefully that didn't overwhelm you too much, but the point is it's really easy to get caught up in so much noise when it comes to trading because there is infinite amount of things that you can mark out, but you want to focus on the major things and the things that are in correlation with the narrative that you're building. So yeah, I'll let Blake go back into some of this stuff for a bit, just foundational stuff. And when it rolls around towards the models, I'll chime in again.
Oh yeah.
But yeah, I'll let Blake do his thing.
Cool. Yeah, I mean, I think that pretty much covers the basic liquidity. Again, guys, we're going to be talking about how to actually use this with our models very, very soon. I don't want to apply the entry model yet. I just want you guys to simply understand the logic behind, what makes up buy side liquidity, what makes up sell side liquidity. And then from there, we can start identifying it in our models and then applying that with actual trading. So W's in the chat, W's in the chat. Let's move on to now fair value gaps. Okay, fair value gaps. This is going to be the final thing we're going to cover before we get into the actual sauce of our models, which is, I know what all of you guys are super, super hyped about. But let's get into fair value gaps for my beginners in here. Yeah, so let's get into it. Okay, fair value gaps. What makes up a fair value gap? So a fair value gap, guys, is basically just an inefficiency in price, right? It's a sign that price is going for higher levels if it's a bullish fair value gap. And if it's a bearish fair value gap, sign that price is going for lower levels. Okay, so what do I mean by this? Okay, this is what a fair value gap is. Boom, boom, boom. So a fair value gap is a 3-candle pattern formation, right? Where the high of the first candle doesn't overlap with the low of the third candle. So the high of the third candle doesn't overlap with the low of this third candle. And this is an extremely impulsive move that happens within the market. And this is a sign that the market is going to continue going higher. And what price typically does off of these fair value gaps is we tend to trade into them. We react, and then we go higher, right? So again, this is an inefficiency that price likes to go back and fill. Price loves to trade back to inefficiencies, which is what we're going to get into later with our models, but it also loves to react off of this and then trade higher. So this is basic external to internal to external, right? This is just how structure is. And then what does a bearish fair value gap look like? Well, we can do the same thing. Boom, boom, boom. Make this red. And a bearish fair value gap is when the low of the first candle doesn't overlap with the high of the third candle. As you guys can see there, this doesn't overlap. So what does a fair value gap not look like? Because I know a lot of you guys are going to be confused. Fair value gap doesn't look like this, for example. Let's say we have a move like this, these 3 candles. This doesn't make up a fair value gap. Why? Because the low of the first candle overlaps with the high of this candle. Right? So as you can see here, this overlaps. So this is not what a fair value gap is. But a fair value gap is this. where it doesn't overlap. We create this gap in the market. And this is a sign that price is super bearish. It's a very impulsive move. You'll see these gaps get created when we have strong impulse moves down, and we're going to target, liquidity down here. So it's really important that you guys see this, mark this out, and be like, oh, this is a bearish rally gap. And what price typically does with these gaps, we trade back into it, react, and then boom, boom, boom. Right? Beautiful. I'm going to get into now what fair value gaps now look like on the charts. Okay, so let's look at some chart examples. Okay. So for example, right here, let's look on the 15-minute time frame. Okay. We see this impulse move down, right? We see bearish structure start forming. And what do we end up leaving behind? Well, we leave behind two fair value gaps. How do I know that these are fair value gaps? Well, as you can see here, we have the low of this first candle doesn't overlap with the low of this third candle. So the low of this first candle doesn't overlap with the high of this third candle. And this creates an imbalance in the market. Where's another imbalance in the market? Well, the low of this candle doesn't overlap with the high of this third candle. Boom, another fair value gap in the market. And what is not a fair value gap? Well, let's see here. We have three candles right here. We have this, this, and this. Is this a fair value gap, guys? Are these three candles right here a fair value gap? Does this make up a fair value gap? Do we see a gap here? Yes or no? No, right? We don't see a fair value gap. So what does this mean? That there's no inefficiency in the market here, and price doesn't need to trade back towards this area. But where price does need to trade back to is these inefficiencies. So I'm going to start implementing a little bit of stuff on the model now. But if we want to take a short position, for example, right, where does price need to go? We first need to go higher to fill these inefficiencies. And this is also a great place where you guys can start looking to take shorts instead of trading down here when we have these inefficiencies, because this is just not protected, right? You need to see price go back here before making that move lower. Price loves to rebalance ranges. So wait for that to happen, fill that, and then we can start trading lower, right? Boom. And then we can start trading lower. Really, really nice. And it's really good that you guys can also start targeting these even, which is what the Mac model is about. You can start targeting these unfilled inefficiencies. And then, of course, taking the trades back down to where? Sell side liquidity. You guys are starting to see how everything's starting to align, right? Fair value gaps, liquidity. And then what else does price like to do? Trade back to more inefficiencies here. Where is this? This is another fair value gap, right? Where the low of this first candle doesn't overlap with the high of this third candle here. Okay. This is another fair value gap. Okay. Now I'm going to find one more example of a bullish fair value gap, and then we will move on to the models. So here we have a huge injection of price, right? We have price having a very strong delivery up where we have a 3-candle pattern where we have 1, 2, 3. And this first candle high doesn't overlap with this third candle's low, making this a fair value gap. Price likes to trade into these gaps. And then what do we see above here, guys? Buy side liquidity, right? Where this is swing high because there's a 3-candle pattern formation up there. So you can mark out your buy side liquidity, and price loves to trade into these inefficiencies, these rebalance this range, and then trade up towards that buy side liquidity, right? And there you have it. All right.
So now something I want to talk about, which is, I guess, relatively more complex, is just the utilization of fair value gaps correctly, right? And so I just saw someone ask, what timeframes do you look for fair value gaps and all that thing. So let me just go into something. And this is what I guess I call time frame alignment. And I'm going to be super quick with this to just really lock in alignment. Alignment? Yeah, sure. That's right. And so the first thing I'm going to say is if I'm on the higher time frame, right, I want to see what the most recent higher time frame fair value gap that I'm bouncing off of is, right? So if I go on the hourly chart and I see that going into New York session on the 1 hour time frame, I'm bouncing off this bullish fair value gap, right? And this is the 1 hour / 4 hour, 1 hour / 4 hour time frame. Then I'm utilizing the 1 hour and 4 hour time frames as my narrative, right? So we're bouncing off a 1 hour bullish fair value gap. Cool. That means that if I were to take longs, do I have a foundation on the higher time frame to support this narrative, this idea? Yes, I do. Then there's going to be, right, what you guys are probably most used to seeing, like the lower time frame, I guess, fair value gaps and such. Like if we have 1 minute, 5 minutes and stuff. And so anything in the 1 to 5 minute, I guess, time frame is going to be, I guess, more entry based. But as you guys know, and I'm sure you guys have seen our YouTube videos, we don't necessarily trade. We don't enter off fair value gaps. We enter off inversions. So if we had, let's say a bearish fair value gap here, we would enter if it gets inversed. But that means that now there's this huge gap between the higher time frame and the lower time frame, which we're missing out on. And that's what needs to be transactional, right? So my 1 hour and 4 hours is going to serve as my narrative building, my bias building. It's my foundation behind any trade that I'm taking, right? I need a key level in that time frame to support the idea. My 1 to 5 minutes is going to be my entry system, but then there has to be something in the middle to support my ideas, right? And that's going to be something like a 5 minute, right? So the 5 minute is going to be the transactional, I guess, time frame. It's what aligns the 5 and 15 minute is what aligns the hourly with the lower time frame. So if I'm bouncing off, the 1 hour fair value gap I mentioned before, we're bouncing off the 1 hour fair value gap, and I want to take longs. Then now what I want to see is a bounce off a 5 to 15 minute gap. And so let's say after we hit that hourly gap, now we're bouncing off a 5 or 15 minute time frame fair value gap. That's going to serve as my transaction between the higher time frame and lower time frame. And that means that now I am ready to execute my trades because I've aligned the time frames. And it's super important that you guys understand this because, it's fractal. Time is fractal, but you need to scale down until everything aligns. And then, of course, from there, you start marking out the other stuff that we've talked about. Okay, well, now if market is going up, we know that we have bullish market structure. Do we have bullish liquidity above that we can target? Yeah, we have this high and we have this major high right here. So these would be the two targets, these two major highs, and all that good stuff. And so you combine everything pretty much that you've heard so far to just build a foundation. And, we're going to get a bit more complex with this with the model breakdowns. But the point is, once you start combining all these ideas, that's when you really start getting just powerful narrative building is the most important part, and a good understanding of drawn liquidity. The entry system at the end of the day is going to be the easiest thing to understand because it's just a set of rules that you follow to enter a trade. But what's really important is that you do understand foundationally things like this, because this is what's going to get your drawn liquidity to be right, 70+% of the time. And then it just comes down to an entry system. But yeah, so that pretty much answers the question for those of you asking, okay, what time frames do I look at? Your 1 hour and 4 hours is going to be your bias building. So if you're bouncing off a 1 hour bullish fair value gap, that it would be valid to take longs. Then your 5 and 15 minutes going to be your drawn liquidity indicator. If you're bouncing off a 5 and 15 minute fair value gap, then you also know that it's safe to say that this is a key level and that we're going to continue going higher. And then the 1 to 5 minute is going to be your execution based timeframes. And yeah, hopefully you understand what I'm saying with that, but I'll let Blake continue and then I'll get into model stuff with him in a bit as well.
Oh yeah. Dope. Cool. What have we covered so far, guys? Fair value gaps. We've covered liquidity. We've covered market structure. We've covered candlesticks. This is the basics of my trading. I really don't use much else than that. And Patty just briefly touched on inversions, which we're going to get into with the actual entry model. We'll get in more into that if you guys are a little bit confused on that. So we'll get into that in a second here. Also, just check this banger I just hit. Check that banger I just hit today. 1 to 4.8 RR. We're going to get into this in a second, how I just took this freaking banger of a trade in a second. But really nice. If you guys want to start learning how to catch trades like this, we'll get into it. Okay. So let's get back into the slides though. Where's my slides go? Where'd my slides go? So yeah, what we've covered is how to trade well in school and working, right? We've covered our basic ICD concepts, the framework that you need to actually start trading the models. And I guess I did ask this at the beginning, but we've gotten a couple more people in here since we've started. But where are you guys at on your trading journey? Are you guys complete beginners? Are you guys intermediate? Are you more advanced? You already know the models? Mainly mid-level. Mainly mid? Cool. Dope. In the chat also, how many accounts have you guys blown? Me personally, bro, when I was first starting off trading, I've blown, hundreds of accounts. I don't even know the number, but it was thousands of dollars. It was over like 5K, which
Bro,
is
I have like this. I have this one
crazy.
core memory, bro, sitting in the back of my communications class where I literally ran through, I think, 6 Top Step accounts in the span of like 5 minutes.
Oh
bro.
yeah, that's gut wrenching.
But yeah, shit was crazy, bro.
Intermediate, blowing lost accounts, paper trading. Cool. Yeah, mostly intermediate, couple beginners. Even if you're an intermediate or like advanced trader, it's still good to refresh on these concepts, guys. But yeah, cool. It's time to fix that.
Yeah. So a really big way. Okay, so here's the thing. Obviously, the most important experience you're going to get in the markets is going to be in live markets. But if you want to mitigate risk and the chances of you losing a lot of money in the markets, the first step is understanding that, paper trading and backtest maxing is going to be the best way to go into live markets with the highest amount of conviction and the least amount of risk. And what I mean by least amount of risk is, you're, I guess, prepared psychologically enough and technically enough where you can execute consistently and not just be doing a bunch of guesswork on a funded and blowing them left and right. So always start with paper trading, right? Paper trading is just trading with fake money, but you can still trade in the live markets. Wait, when are we going to go over the models after this?
Yeah.
Oh, okay. So, you can't lose money, but you'll get a sense of executions and win rate. And I will say there is only there's so much of a threshold with paper trading and like how much you can learn because, even though you're on the live markets, once you're on real, on the funded accounts and actually having risk on the table, that's truly when you learn the most. But it's still very important that you start by paper trading. And everyone who's taken this advice, tends to see way more, I guess, success with less money thrown away. So we use TradingView, of course. Everything is executed through TradingView. Most of these prop firms have Trade-Evade brokerage or a brokerage that can link directly to TradingView, which allows you to execute on that. So make sure you download that. And then, paper trade until you win rate is consistent. You can simulate the prop firm, right? Like create a 50K paper trading account and tell yourself, okay, well, if I lose 4% on the account, then I blew the account. But if I made 6%, then I passed the account, and do that on paper trading until you can consistently, quote unquote, pass an account as if you were trading on props, and then get into fundeds. So phase 2, backtesting previous market data to see your win rate. We've done this. I mean, I don't even know how much time we've spent on backtesting. But when we were starting out, when we were finding strategies, hundreds of hours were spent backtesting, years of data. It's incredibly important because once you do it yourself, once you see the number yourself, that's when you actually trust the system, right? So if I tell you, oh, bro, the strategy has a 70% win rate, and you're like, no, it doesn't, bro. Like, no, it doesn't. I'm like, backtest it. And then you start backtesting it, and then you go through a year of data, and you're like, oh, shit, I had like a 75, 76% win rate. Like, you're right. The fact that you even did that is going to make you feel so much more confident going into the markets, right? And it's a good way to get your reps in. So do this at all stages. Even if you've gotten payouts, you should be backtesting religiously. Even to this day, I will say I don't backtest too often anymore, but occasionally if I'm on a flight or something and I'm pretty bored, I'll throw in a couple backtesting sessions. If my psych is ever shot because I have like a bad week and I'm starting to get like the feeling, oh, like did I forget shit or something? Sometimes I'll just backtest and it reminds me that I know exactly what I'm doing. But it's important, right? It's important. So you get a sense of how price moves historically over many months. You get a sense of how setups play out over many months. And this also just helps you be prepared every year. Like a lot of people think, oh, bro, like Blake, like everyone says like, oh, dude, December is so bad, this and that. Right. And we're like, well, we've backtested this December many times. We've even traded December many times and we still perform well. So because we have that data, we know that we can trade it and not really be tripping about anything.
Yeah.
So that's also why it's really important, right? So eventually you'll start to pick up on the subconscious skill of profitable executions. You'll intuitively know how price moves. And there are things that can't be taught. Like genuinely, you can learn all these concepts that we teach you, but you're still going to develop your own subjective perspective on the market through your time looking at the live markets and all that stuff. So it's important that you backtest, that you do all these things because you're going to build your own discretion. And that's something that can't be taught. It's just, how it is, bro. Me and Blake, despite using all the same, ideologies, theories, concepts, everything, we still build different narratives every day going to the markets. And that's part of the fucking trading experience. You're never going to think the same way as another person, but that doesn't mean you're wrong. So mysteries achieved through time rather than only trading live market data during the session you trade, limited hours every day. So yeah, wait, what did I just say? Mastery is achieved through time. don't trade don't trade all day. Cause at the end of the day, listen, like you guys are trying to escape, whether let's say you're trying to not be part of the corporate rat race and work a 9 to 5. And you guys say all the shit, oh, well, trading is a way to escape the matrix. But then you clock in 9 hours in one day trading, bro. That doesn't even make sense. Like it's so counterintuitive. Like how are you going to learn a skill that is supposed to give you time freedom and then treat it like it's a job? That's the problem with 99% of traders, bro. You guys don't understand that you aren't meant to be there for 4, 5, 6, 7, 8, 9 hours a day trading. You're supposed to literally trade for one session, which shouldn't take you more than an hour and a half. And that's it, bro. Go enjoy life. That's also how you become a better trader, if you prioritize your mental health and you don't drown yourself in the charts. But yeah, you can backtest countless hours, and the live markets only provide a limited amount of hours. So when you are trading on the live markets, trade the one session that matters. And if you still feel the need to keep trading and executing, then backtest, because backtesting you can do forever, right? And that's the easiest way to 2x your profitability. We've backtested plenty before. We've used FX Replay, we've used a bunch of different sites, but here we have some stats. Right. So this is over the course of a year, 71% win rate. And to be honest, this is kind of like old in a way. Like this data is from a year or 2 years ago when we back tested, but I'm sure if we did it now, it'd probably be closer to 80%.
Yeah. This is like data from, it was around from 2023, I believe, to 2025. But yeah, this year, 2024. But this year, definitely my win rate has gone a lot better. That's just how trading is, right? You're going to be constantly improving your model, constantly improving your edge. And you do that through backtesting, which is why I tell everyone backtest, journal.
Yeah, bro. We have students who are posting testimonials saying they have an 80% win rate or even more sometimes, which honestly, that I don't really understand, but fuck it, bro. Maybe some motherfuckers are just wizards in the backtesting. But yeah, remember, work more now to work less later. Time for you to learn the story of Captain Underpants. So this is one of my most goated students. And I love this dude's story, bro, because it shows what true discipline and commitment can get you with trading. This guy came to me about, what was it? A year ago, I'd say. He was one of our first students. And literally this dude, I remember I took my call with him. And he was telling me like his story. He's like, yeah, bro, I'm going on a honeymoon soon, so I'm not gonna be able to join the calls, but I'm gonna watch all the recordings that you post and all this shit. I'm currently working as a teacher. I have 2 kids, and I don't get a lot of time to spend time with my kids. And I was like, damn, like, well, that's definitely a rough situation. But sometimes it's that type of pressure and that feeling of that you're backed up against the wall that makes people succeed. And that's exactly what this guy did. Right after his honeymoon, he came back, he grinded all the videos and all the live lessons that he had missed. He watched everything, and within 2 months, he had requested, $40K in payouts. And then he did it again the next month, and he had over $90K in payouts within 3 months of just learning with us, which was super cool. And then he continued getting payouts. He no longer works as a teacher, which is sick, right? And it just goes to show, bro, no matter how old you are, no matter what your situation is, you can always honestly fucking fix it and do what you have to do. It's never too late. A lot of you guys that are listening right now are considerably younger than this guy. And, even still, bro, there's like this nowadays, dude, I hear 18-year-olds thinking that you guys ran out of time. You guys are saying like, bro, Patty, I'm about to graduate high school. I'm cooked. I'm like, dog, what do you mean you're cooked, bro? You're good, bro. It doesn't matter if you're fucking 17, if you're 18, if you're 25 or you're 35 or 40, bro. The point is start now. If you're having that idea or just the feeling of, I don't like the situation I'm in with my life right now, just make the change right fucking now. No one's telling you can't do it, bro. But yeah, obviously this guy being in Singapore and being a teacher means he had 2 disadvantages. His time zone was absolutely cooked and he was extremely busy with work. But despite all this, he still got an insane amount of payouts within those 3 months. It says 40K, but it's actually 90K with the 3 months.
Yeah, after 3 months.
Right. 90K. Well, why was his journey so quick? Well, he back tested a ton. He did everything we had to do. And that's, how you freaking do it. And then we had Riley Botha, which we talked about before. You guys saw that, he was a regular high school kid. He had spent a ton of time trying to learn how to trade and couldn't really figure it out. He had to work. He had all this shit going on. And eventually, after being our student for a bit, he was able to hit his first 5-figure month and consistently just kept killing it, bought a dream car and all that stuff. And we made a video about him and just interviewing him, which was pretty sick, dude. And just his whole story was really cool. So definitely check that out. And, you know, once again, a lot of this is attributed to backtesting. People who skip this portion of it, they never build the data for themselves and never build a conviction. So this is why you need a backtest. But the common theme is we do realize it takes people around 3 months to learn our trading model. I'd say the first month is dedicated to just understanding it. Second month is dedicated to, you know, a lot of application and getting better at it. And by the third month, people have usually mastered our model. That's just generally what we realize. So if you go all in, you know, but that's if I'm saying, but that's if you go all in. And that's what I was talking about earlier before in the webinar, bro. Like, imagine you just committed 100% into one thing for a year, dude. Your life will turn around 180 degrees. You guys truly underestimate what a year of pure commitment is. I can't fucking emphasize it enough. All right. But yeah, so what we just covered is pretty much how to achieve consistent profitability as a student or working a full-time job. There's really never an excuse. I mean, even when I was working a job where I'd pull up an hour and a half early to work and get some tasks done and then lock myself in a room, like a quiet booth, and trade for about 30 minutes. I just wanted it bad enough, bro. And then obviously I got to the point where I was like, well, you know what? I think I'm ready to make the commitment to trading, quit the job, all that stuff. But yeah, there was method one, which is trading work and then trading during a different session. So dialing in your routine, creating a ritual around trading, that's incredibly important. People think, dude, you don't build your psychology, you don't build the discipline through trading more. Trading more is not what gets your psychology locked in. It's not what makes you necessarily a better trader. Yes, it helps refine technicals, but your technicals will never in your life be applied consistently and disciplinedly if your life outside of the charts is a mess. And I've said this before, the charts are a reflection of your weakest habits. If you are someone with no drive, no discipline, no routine, you skip the gym, you eat like shit, you don't do anything productive outside of the charts, you are not going to be a better fucking trader. And I always tell this, like, people this, like, I'm not here to make you just like a better trader. I'm here to make you a better person. Because genuinely, so many people have shit so twisted, bro, with trading. It is not like you're a fucking investment banker where you just simply showing up to work every day is going to make you a better investment banker. Dude, this is you versus you, my guy. Like, this requires your full commitment to reshape your whole life inside and out. It's very important you understand that, bro. And I hope that anyone listening to this, if your fucking life is not the ideal life that you should be living, if you think like, damn, there's so much I could be doing better right now, then I hope you start making some change. But yeah, so our fundamental trading concepts are, of course, the backbone of our trading model. Everything we showed you, bro, it's what our like theory and everything revolves around. Liquidity, fair value apps, market structure. And it's really not overcomplicated. It's just the fact that we've mastered that and learned how to utilize it to its full potential. But yeah, like I mentioned, if you want to speed up your journey, paper trading, backtesting, these are real life success stories, students who applied our methodologies, you know, gotten plenty of payouts, almost 60K this guy got.
Bro, we have an absurd amount of payouts too. Like, we can't even show this on the screen, but like every single day we are getting cracked testimonials.
Yeah.
So shout out to every fucking person in that.
We honestly don't show them enough, but I mean, it's, yeah, Blake and I just, whatever.
Yeah.
we don't do much with our lives except fucking just work out and just chill. But yeah, I mean, that's
ready though.
That's why we did this boot camp, dude, because Blake and I honestly don't spend a lot of time talking about the shit we do and the people we help. So we were like, fuck it, let's just dedicate a call to actually show people some of this stuff. We know a lot of you guys don't even know that we had a fucking program.
Yeah.
But yeah, with that out of the way, on to pillar 2 of this live boot camp: how to flip $500 into 10K a month using our dead simple mechanical and PDI models. So anytime you guys hear people say, oh, I'm trading the PV model, it's usually these models, combination of both. Maybe they mastered one or the other. It doesn't matter. They're pretty much the same shit at the end of the day. But now let's get into the model breakdowns. Come on, baby. But yeah.
Let's get into it. Okay. So we can honestly like go over like the trade I took today. And we can go over this. Okay. So let's
You know, I was looking on my phone to see if we were gonna get an SMT. I was gonna tell you if we did.
I know. Oh, I think I have to log back in.
Nah, don't.
Whatever.
You don't
It's not that deep. It's not that deep.
Everyone already saw yours.
Yeah, everyone already saw the executions. So let's get into this, guys. So what Patrick was talking about, right? First off, with the inversions, he briefly touched on this. What is an inversion for value gap? So an inversion for value gap is the backbone of our model, right? So it revolves around this, where we have a fair value gap, right? What I just talked about.
Wait.
What?
I know a lot of people said that they actually need to piss. Give everyone a minute.
Okay.
To join up. So everyone just literally get your notebooks out. We're not trying to rush you into this.
True.
This is where it's going to get saucy. Take 1 minute to just clear your mind. I know we just gave you a shit ton of information.
True.
So just.
Oh, here it is.
And we'll get started in a second.
Yeah, we'll get started in a second. While we wait, Joe, just like admire this trade I took. On my Amp Live account, by the way. No funny shit. This ain't no funded shit. I'm so excited to teach you guys the model. So excited. Can't wait. Yeah, this guy said, hurry up. I'm pissing in a cup right now. All right, blah. Swing high, swing low. Liquidity, take it down we go. Swing high, swing low. Liquidity, take it down we go. Got buy side and sell side. Ooh. Got buy side and sell side. One more time. Swing high, swing low. Liquidity, take it down we go. Swing high, swing low. Liquidity, take it down we go. Ooh. Yeah.
This will be included in the course.
Yes.
If you want to learn the song.
Yeah. If you guys want to learn a song, learn how to play Swing High, Swing Low by Patty
guys,
Blake.
We lied to you. We're not here to teach you the model.
Yeah.
Once you do sign up at the end, it's really just going to be the chords to the song, the lyrics, and then our tickets to our live performance.
Right. Let's do it. Let's do a recap, and I'll go over the model. Okay, so again, briefly, what is the model based around? It's based around inversion for value gaps. Meaning what? Meaning when the body has closed through the fair value gap, it means that is inverse. It means it's been disrespected. So what does a fair value gap look like when it's been respected? It looks like this, right? Where we have a fair value gap here, and we only wick into it, and then we trade away, right? So this means right here that the fair value gap is respected. Now, a fair value gap that's disrespected looks like what? When the body has closed through. So currently, this fair value gap is what? Respected, right? This means it's been respected, but until we get a body that's closed below this, right there, boom, that means it's inverse. That means we have a change in order flow. It's a very similar thing to the market structure shift, right? When we close below the lows. But here with inverses, you don't have to wait for that market structure shift all the way down here. You can just simply take the inversion right here if you have everything aligned. And this is actually the setup I took today. I wanted a little bit of better RR, so I waited for a pullback into this. But yeah, let's get into everything. Okay, starting off with the higher time frame, I'm going to show you guys how the model works on the higher time frame first. Okay, yeah, so higher time frame, right? Higher time frame was what? Bearish. Okay, higher time frame is bearish. Why? Because we are moving in a downtrend on the higher time frame, right? We have highs, lows, lower highs, lower lows, lower highs, lower lows, right? This is the downtrend we talked about. I'm still using these concepts to this day, guys. I hope you guys know that. Like, this is basic stuff that I'm still using to this day. Okay, so to identify if I'm going to be taking shorts or longs on the day. So I looked at this on the 1 hour time frame. I identified that we are in a downtrend. And we are targeting what? Where is the market even going? Well, I look to the left of us here. What is this? Sell side liquidity pool. Ooh, would you look at that? We have sell side resting right here, meaning the market is going to dump towards this, right? We are in a downtrend and we are seeking out this. So what do I need to wait for me to take my setup, for me to take my model? What am I going to wait for, right? So let's go back a little bit, rewind to around 9:30 a.m., right? If we look at 9:30 a.m. Eastern time, right, I'm going to look at like around the 5 minute, and I'm checking, right? We have sell side liquidity resting right here, right? We have this swing low right here. We also have relative equal lows. Remember, we touched on that before, guys. How important is relative equal lows? It is very important because it's showing that the market and people are seeing this as what? Support. So what are they going to do? Put their stop losses here because they see, oh, we bounced off this level once. We're going to do it again. Are we going to do that again? No. When we start trading back to this, we're going to be running through this because there's a lot of stop losses here, a lot of liquidity resting here. So this is a great area of sell side liquidity on the lower time frame. And this is now starting to align with the higher time frame, right? You see that we have this sell side pool here. And look at this. This is aligning with the higher time frame. So what do I want to see happen at open? I want to see manipulation. What is manipulation? A sweep on buy side liquidity. And I'm going to be looking and marking out my buy side liquidity pools on the 15-minute time frame and above, right? So I'm looking at the 15-minute time frame. Where is the most obvious swing high here in the market? If I'm just looking here, I'm probably going to mark out this, right? Very, very obvious. We also have this one here. Is it that obvious though? No. Like this is the most obvious one that I see in the market. This is a beautiful, beautiful buy side liquidity pool. Buy side liquidity. And what is this also? Ooh, we have a fair value gap here. We have a bearish fair value gap on the 1 hour. So all these confluences aligned. This is a great, great run on liquidity because we have a fair value gap aligned with 1 hour buy side liquidity pool. So again, recap so far what I've just covered. I'm bearish on the higher time frame. So what am I going to be looking for? Shorts. I'm strictly going to be looking for shorts. Now, what do I want to see happen? I want to see price trade up first, have manipulation in the market, take out liquidity, so then the market can actually move, right? The market shouldn't be moving until we have a sweep on liquidity or until we tap into a fair value gap. And we get both of those things right here, where we get a sweep on liquidity and then we get a tap into a fair value gap. Boom, beautiful. Now, what do we start doing? We start disrespecting these gaps right here. Really, really good sign that the market is bearish. I'm personally not going to be taking a short like this, though, just because it's not good RR, right? I want to be targeting this low, for example. If I were to take this short and enter here after this candle got close through, what would I have to do? Have a really bad risk reward? I'm not going to do that. So what am I going to have instead? I'm going to wait for price to pull back into what? A 5-minute fair value gap right here. And then I can take my short, okay? So this is the model, right? Models inside of models. Now we're zooming into the lower time frame. What do? We leave, what do we do here? More relative equal lows, guys. Look at this. The market is bouncing from this area, but what do people not understand? That this is simply just more liquidity getting pulled, right? So a lot of people think, oh, we're going to come back down in this area again because we've already rejected it 1, 2, 3 times. We're going to come back again and we're going to bounce from here. Is that going to happen though? No. So what do we wait for? Again, pull back into a gap. Price pulls into a gap. And then what do we have? An unfilled. Yeah.
Sorry. And literally, like, think back at exactly what I had just told you guys before, right? The transaction. We go on the higher time frame, and what do we see? What are we bouncing off of, guys? 1 hour bearish fair value gap. Then what is the transactional time frame to align everything and give us an entry? The 5 and 15 minute. Now what are we bouncing off of? A 5 and 15 minute. We hit that hourly gap. Now we're bouncing off a 5 and 15 minute. And now what are we entering off? Well, you know, if you have a 30 second, fuck it, you can take the 30 second, but it doesn't matter. 30 seconds, a 5 minute, it doesn't matter where the inversion is presented. Anywhere on this time frame, it's going to work, right? And so in this case, I mean, listen, guys, you don't need the 30 second, by the way. You don't need it at all. I would say wait until you have 200 executions on the inversion model before you get it.
Yeah,
I'd say out of what, 100 trades, 6 of them have
30 seconds. So this is an exception for sure. But yeah, I'm gonna write this out, right? So for bias, what was I looking at for bias, guys? I was on the 4 hour, the 1 hour, and the 15 minute, right? To kind of determine my bias, to determine my trend. And I understood that we were in that downtrend, right? Then what am I gonna look at for my actual rejection points and my entries and my key levels? This is really important. Your key levels are gonna be on the 15-minute time frame, or sorry, 4 hour, 1 hour as well, 15 minute, and also 5 minutes. So I'm gonna include the 5 minute here. So what key level do we have? 1 hour fair value gap, and we had a sweep on liquidity. And then we also had 5 minute fair value gap right here. And now we have targets. Liquidity targets, right? We can have targets on liquidity. liquidity and imbalances and for rally gaps. All right. So we can target unfilled gaps, right, guys? Remember what I was talking about with for rally gaps, how for rally gaps love to get traded back to, love to get rebalanced. This is really, really important that you guys understand that the market is constantly trading from for rally gaps and rebalancing that range to go to another range, to rebalance more gaps, to then target liquidity. So you see here, what do we have on the 5-minute? An unfilled 5-minute gap, meaning that the market hasn't traded into this. There are no wicks within this for rally gap, right? You can see here that the market traded into this, but is there any wicks in this? No. So yes, I just saw a comment. It's a magnet in price. It's really important that you guys understand that these for rally gaps are magnets in price. So I know that at least we're going to get to this 5-minute for rally gap. And then if we're truly going to be bearish, we're going to start running through this and go towards these stacked lows right here, right? So boom, let's just mark this out like that. Stacked lows, sell side liquidity, boom, 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 boom. And targets on liquidity for rally gap. So what is this trade doing? I'm targeting liquidity, and I'm also targeting an unfilled 5-minute gap. Beautiful. Look at this. I'm targeting this liquidity and also this unfilled gap. And now I'm just going to wait for my inversion for rally gap to present itself. And what does it happen right here? We have an inversion for rally gap. Boom. This is the 30-second time frame, which again, like Pat was saying, not typically I'm checking the 30-second, but I'm using this for my really like my top of tick entries. You guys will get to this point when you start getting more screen time, right? I've been trading for over 4 years now, so I can kind of tell when this move's about to happen. But for your entries, you go on the 1-minute to 5-minute to find your inversion for rally gap model. And I'm usually like my typical entries are on like the 1-minute to 3-minute. So bias this time frame, key levels this time frame, my targets are like this. And, that's also on the 15-minute time frame and above, or 5-minute time frame and above. And my entries is that. So, yeah. And that's it. That's really it, guys. This is it. The 30-second, I take my short right here, and let's just show you guys executions.
Yeah, the entry can be on the 1 to 5 minute, whatever. The market's always going to be different. Obviously, I will say, though, like, the price action in the last week or two, I mean, it's just going to be incredibly slow. You're going to get way better delivery on any other day. Once January 1st starts, shit will not look this barcodey.
Yeah, this took way too long to deliver.
Volatility is a huge contribution to the model probability. So when you have a month like this where it's not necessarily the highest volatility, it's not the cleanest. But yeah, I'll go a little bit into, I guess, the PDI side of things now. And just a bit of my ideology, and then we will
do some Q&A.
Yeah, we'll do some Q&A, and yeah.
Yeah. Where did you put your break even? That's a good question that I'm not going to answer. No. You put your break even, guys, when we hit the swing lows. So remember, like the swing lows, the swing highs I was talking about with market structure. It's important that you put it at that unfilled gap, which is what the target was there. So if you go on like the 5-minute,
yeah, I mean. Pretty much, dude, your break even is always going to be the first significant key level, right? So since we know that the 5 and 15-minute fair value gaps are, I guess, these key levels, they operate as key levels. That means that we can anticipate that price can bounce off of them and potentially reverse. So we want to make sure that any opportunity where price can potentially reverse on us, we protect our position, right? And in that case, it's like the 5-minute gap here. So once we trade into this, we go break even. But since we have a stronger drawn liquidity below, being like those lows down there, we just try to hold until price takes that, or NSMT, or however it may be. Also, by the way, this is recorded, so you can go back. Sorry for speaking fast, but we're trying to cover as much as possible. And now the next thing really that I want to go over is PDI, which it just revolves around the theory of, I guess, AMD, accumulation, manipulation, distribution. So there's 3 things that go into AMD, right? One being accumulation. And this is a great model for trading counter trend pretty much. And so accumulation, obviously, as you guys know, is just when market chops and goes sideways. But the more important thing to understand from accumulation is to recognize where the liquidity is being generated. So if we're accumulating, but we're leaving failure swing highs above each time, then we know that the liquidity is going to be above. And ideally, we're going to want to find longs. And so then the next stage would be manipulation, which is obviously just once price breaks out of this range and we can anticipate that this is a fake out move and we're not actually going to go lower, but we're preparing to actually start going higher. And so then, of course, finally is going to be the distribution phase, which is once price actually reverses this manipulation and starts going higher. And so I'm sure you guys have heard of AMD or whatever, maybe you haven't, but it's a very simple 3-stage process. And what I've noticed, and this happened, I guess, 2 years ago around, is that with inversions, with the theories that we use, it's an incredible, I guess, concept to merge with like the way we trade. And you're able to catch really, really significant moves. And so at the manipulation leg, which is right here, we look to see for an inverse, same way Blake talked about, and then we're to take a long in the corresponding direction, right? So here we would take a long and we would target just the run on this distribution. And so it's really not complex at all. But what does it do really well for? Well, it's amazing for pretty much taking counter trend trades. So if we look at like this pre-market setup right now, right, what do we notice? Well, price action is going sideways, right? So price action is going sideways right now. We're not really doing much. We're starting to chop around. And so now I want to see where could price potentially manipulate to. And I see that we have this significant liquidity below, right? And so in a scenario like this, if I notice, okay, price is price is accumulating right here. We have these, I guess this generated liquidity right above, right? These relatively equal highs. And now I want to wait for the manipulation. And then you get the manipulation and I see price manipulates lower and it takes out a key level, takes out the significant liquidity right here. Then what that tells me is that if we get an inversion here to the upside, then we'll most likely run these highs and price will continue higher and we'll go into distribution phase, right? And so eventually price inverses right here and we can take longs off manipulation legs, stop loss right here. And why do we put our stop loss here? Well, because we assume that this low is going to be protected. We know because this low has done something of significance, it has taken out a key level, that this low will be protected until a new objective has been made. So not everything can stay protected. I mean, if anything, nothing ever stays protected. But when an objective is met, a new objective is formed. And so the previous objective is considered protected until something else significant happens. So since this low has taken out this liquidity here, this major sell side here, and we're getting distribution and confirmation that price wants to go higher here, we can assume that price won't go back to these lows until something of significance happens, right? And so we can find like our next key level here, which in this case, we have this unfilled 15-minute right here, right? Which this also ties into the MEC model pretty much. And so once price trades up until this level, I want to be break even, and I simply want to aim for about a 1-to-1, right? So somewhere around there. And that's literally like how it goes, bro. There's this huge misconception that you need high RR, that you need all this shit. Listen, bro, aesthetics is cool. And yeah, it is cool to take a fucking 1-to-10 RR trade, but that's not what matters. That's not the point of trading. Like if all you ever focus on is it looking pretty on paper, you're not going to catch high probability trades. I do not give a fuck if my trade has a mediocre close or if things don't look that fucking good. If you watch my YouTube videos and you look at the comments on my live trading videos, everyone's like, bro, why would you enter that? Like the close was so shit. Like, dude, the RR wasn't that big. Dude, I don't give a fuck. You think I give a fuck? I had everything I wanted to see. I had all the confirmation I needed. I'm trading off of facts, not aesthetics. All right. And that's something you guys need to get in the habit of. Right. And so look, it's as simple as that. I get my 1-to-1, bang, close my trade. And I don't need more than that, really. Sometimes you'll get 1-to-2, but you can't ask for too much. And so this is a really simple version, right, of the PDI. Nothing too crazy, but this is just something that you guys can utilize to trade counter trend, right? So anytime you guys start seeing price, like let's say if we've been bearish for a while and we eventually hit a key level, then it's as simple as, okay, now that we've hit this key level, let's identify if price starts accumulating, right? And it accumulates, and then we get a manipulation lower. We take out that significant liquidity right here. And if we get that inverse to the upside, then we know that we're most likely going to go into a distribution phase, and we want to capitalize on that distribution phase and enter a long and stop loss swing low, TP, wherever the next significant liquidity or significant key level is. And yeah, I mean, dude, this is really simple shit. Sorry if I went fast. You know, you can always rewatch this video, but this is an incredible method for trading counter trend. And listen, I'm going to be completely honest. There is so much more, I guess, that goes into these things, but that like on paper, it's not going to be, I can ramble on forever. It's just the practice of applying these models over and over that you learn more and more about it. And we've refined them so much at this point. And yeah, I mean, there's a lot that goes into it that we teach to our students, but foundationally, this is really all you need to get started. But yeah, we do go a bit more in depth with other stuff, I guess, obviously inside the mentorship. That being said, let's go.
Let's go back to the
let's go back to the slide.
Hell yeah. So much sauce that was just given in like literally under 2 hours. That was crazy. We just fucking cooked there, boys. Beautiful. Hyped. So yeah, that is pretty much the gist of it, guys. I know that was obviously a lot, especially if you're a beginner. That was a lot of sauce that just happened.
We just went through like 7 stages of grief, bro.
Yeah, literally.
From candlesticks to like everything.
Literally every single thing you need to know. But I know that's probably the question you're asking right now is how do I flip $500 into 10K a month? So this is where prop firms come into play. Okay. Funded accounts. So businesses called prop firms sell trading accounts called funded accounts. What does this mean? So first off, solid firms, Tradeify and Alpha Futures, really, really good for beginners. We talk about these all the time for a reason. I've gotten consistent payouts from them. They pay me out with no problem within minutes sometimes. So these are firms that I will promote because I have gotten consistent money from them and my students have as well. So how do they work? Okay. So this is just a brief example. You spend, for example, $150 to buy an account with $50,000 of simulated capital. Okay. Just like a video game. And you have to pass an eval phase and then you can actually win the trades to get paid out. So this is just an example. Let's say you have to make 10% for majority of accounts. It's just 6% usually.
Let's send you already passing.
Oh, sorry. Let's just back up then. Let's back up. So when you're on the evaluation phase, guys, you have to make 6% usually, and you can't lose 3%. Or around 4. So let's just give it for a 100K account, right? You have to make around $6,000 without losing $4,000. That's typically how it works. And if you do that, then you move on to the funded stage where you can actually make the money. So this is first off, just like a test, a challenge to see if you are eligible to start trading with this simulated money. And they pay you out, right? So if you pass that eval phase, you can actually win trades, you get paid out. And let's say, for example, you make 10% on a 50K account, well, you can pay yourself out that 5K now, right? So that sounds too good to be true. I know, but that's why these prop firms have rules in place. So you're not just like absolutely rinsing these firms. Back then, I just wanted to like, as you guys saw from the beginning, when I took out that like 20K payout from Top Step, that's when Top Step didn't really have consistency rules in place. So it was super, super fire to be gaining like insane payouts back then. But now a lot of these prop firms, that's because that was before like copy trading was super popular, bro. And it was so easy to get fat payouts like 2-3 years ago. But now, obviously, with like copy trading becoming super popular, you just being eligible to pay yourself out 2K on one account. If you have max allocation, bro, that's already 10K. Yeah, exactly.
On just one prop.
Exactly.
But yeah,
we're gonna get into that. Yeah, and yeah, I mean, there's also like a max drawdown rule, right? So there's consistency rules. So consistency rules is what a lot of traders, prop firms have nowadays, which is basically your best trading day can't be more than 50% of your profits. What does that mean? So I can't make, let's say for that 20K payout that I showed, right? I can't make $20,000 in one trade and then pay myself out that $20,000. You guys understand? I have to break that up into, let's say, $5,000, another $5,000, another $5,000, and have that consistency. And then I can pay myself that whole entire 20K out, which is really, really important. And with our models now that we've refined it to a point where we can easily follow like a 20% consistency rule easily, because I'm just trading 1-to-1s. Like I'm not having huge RRs, like 1 to 5 RR trades.
There is occasionally like 1 to 2, 1 to 3, 1 to 4, but it's going to average out about like 1 to 1.5, 1 to 2. And honestly, bro, I've rarely ever had a problem with consistency. I'd say very few times. And if I couldn't pay myself out because of consistency, then all it took was like another few days of trading and was eligible.
Mm-hmm.
But yeah, it shouldn't be a problem for anyone. And
Yeah.
a lot of the models that are taught, I will say online, bro, it's like so not ideal for prop firms and shit, bro.
No, not at all. Like that's why I stand by our model so much. Like one-to-ones trading, continuation-based trading is the best way if you're trading firms because of these consistency rules, right? If you're taking, a bunch of losses at the start and then you have 1 to 10 RR banger, well, that kind of sucks because now you have to make that like 10 more times to apply with the consistency rules.
Yeah.
So anyways, there's also max drawdown. If you go below X% on the account, you blow the account, you lose it. So you have to buy another one, right? These are just the rules that these prop firms put in play. And it's usually around like 5%, 6%. And this number goes up as you go up on the account, right? So for example, if you get up to 105K on the account, assuming you have 5% drawdown, then you can't go below that, which is 99.75K, right? So it's a trailing drawdown, which is what these prop firms do, okay? So it's really important that you guys understand that as well. Like you don't have at the start, let's say you have 5K drawdown, you don't have 95K now to lose, or you can't go down to 95K. It trails you up to now 100K.
Eventually, until you build the buffer, though, then they stop trailing you. So
yeah.
Usually after that, 105K in that example, or for example, 53K on a 50K,
Mm-hmm.
it stops following you and it'll just cap out at 50K or 100K, which is nice. We always tell people to build a buffer before you pay yourself out. But yeah.
We'll answer all of your guys' questions in a second.
We're going to do a Q&A in a bit. But yeah, wire model is built for rinsing prop firms. It has a high win rate, 70%. As I mentioned, it's low RR, but that's the trade-off. If you want high win rate, you can't have high RR. That's just how it goes. Meaning we win most trades, but when we do win, it's not as big. And when we lose, we don't lose as much either, pretty much. With a high win rate, it makes it easy to pass consistency, right? We just went over all this stuff. And some of you are probably thinking, well, this seems too good to be true. How do prop firms even make money? Well, believe it or not, 99% of motherfuckers on prop firms are just gambling, fucking full porting accounts left and right, and just donating to these prop firms. But yeah, that is the consequence of gamifying trading. A lot of people are never going to have the feeling that it's serious and they can capitalize on it. And they'll forever just think that it's a joke. And you know what? I shout out them because they keep prop firms alive and we get to keep rinsing them. But yeah. So once you're consistently profitable paper trading backtesting, you move to a funded account, you stay disciplined, only take trades when you see a good setup, right? And you pay yourself out, and then putting it all together. This is pretty much everything we said. And like I mentioned earlier in this boot camp, your goal really is to rinse the prop firms as much as you can. Let's say you have a great year and you secured 6 figures in payouts, or maybe like high 5 figures, whatever it may be. Just you had a good year. Start putting money aside and building a live account, dude. It will be the best decision you ever make. Mm-hmm. And I will say I neglected it for a while, dude. I was like under the impression like, oh fuck, I don't want to be on my live account and risking all my money and all this shit. But it does really make a huge difference. And the ability to pay yourself out whenever is, I think, amazing as a trader. And everyone should have that benefit. So yeah. So you may be thinking, I'm putting in all this work, buying an account, passing the eval phase, and winning more trades to pay myself out. How the fuck am I supposed to make 5 to 6 figures per month from trading like you guys? Well, it's like I mentioned. One of them is either live accounts. And it's exactly as I said. You put all your money into one brokerage and you fund it and you keep 100% of the profits. And this is a pretty easy way to start scaling money. But I will say you need a pretty good jump start with this. So if you have 5K in a live account, you're not going to get very far. I'd say minimum 25, 50K. And you can start
minimum 25.
I would say minimum 25, 50K.
Yeah, 25, 50K for sure. And again, you get that through prop firms. That's the way to do it. You do it prop firms first, get all your payouts out, and then you can put that into your live accounts. Yeah.
But I mean, obviously if you're more on the beginner side, I don't recommend this because you're just inducing way more risk than like the average person who's already consistently profitable. And unlike prop firms, like if you do lose your money on the live account, that shit's gone, my guy. That shit's gone. But yeah, so only trade live accounts have been consistently profitable and you've been earning multiple 5 figures, I'd say, per month, or high 4 figures pretty much. And you're very disciplined. That's very dude, I am telling you, if you open up a live account and you're someone who still has gambling tendencies, you can very easily have a thought like, what if I just full pour my live account? Dude, you can ruin your life so fucking fast. Yeah. And I've seen that happen to a lot of people. So please make sure you're smart about stuff. Yeah. So, if live accounts aren't for you and you're not in this position yet, how do you scale? Well, I'll get into that now. You can go into copy trading. And so I'm sure you've seen a lot of screenshots that Blake and I have posted in the past before when we were mainly trading props and fundeds and whatever. and you see the P&Ls just running down a whole vertical line like this, and you see plus 2,000, whatever, same P&L copied over 20 accounts. And that's the power of copy trading. And we use TradeSyncer. It's considerably the best platform. Back then, people used to use Replicanto and shit, but that's outdated. It's trash. Use TradeSyncer. If you didn't ask for a TradeSyncer subscription on Christmas, well, sell the clothes that you were given and get one of them and get the subscription. It's gonna change your life. So yeah, I mean, pretty much.
Yeah, no, I was just gonna say, like, this is why prop firms is such a crazy ROI game, especially as a beginner. And this is a real gold mine right now, guys. Like, I want you guys to be trading on prop firms as much as you can. You never know in the future if this might get banned because, for example, dude, I spent maybe $150 on all these accounts. So I have around 20 accounts here, $3,000, and I'm making $50,000. So the ROI here is so crazy. So get on prop firms, get on copy trading, especially later on. I don't recommend copy trading first off, like right off the bat. Get out a payout, and then once you get a payout, reinvest into more firms, then reinvest, keep reinvesting, and then you can start getting more and more accounts. I got to this level because I started getting a lot of payouts, and then I put that back into more accounts, and I was able to get, up to 26 accounts here.
And I'd say this is the funnest part of trading, bro, just scaling it. And yeah, someone asked, like, what if they have different rules? On prop firms have different rules. Yeah, they have different rules, but nothing too serious where you shouldn't be able to copy trade unless you're doing something extreme, bro, and you're full porting stuff. Then that's when it becomes a problem. But if you're a consistent trader and you follow actually everything that we're telling you to do, then you should be perfectly fine. Yeah. So how it works, you buy multiple funded accounts, you sync them together with the TradeSyncer software, and you choose a lead account. Whatever you execute on that one lead account, it's going to be copied amongst the rest. And so let's say you get your first payout of 2.5K from one funded account. You spend 1K on Chrome, that's less over 1.5K on 10 50K funded accounts. You earn 10% of those 10 50K accounts. You're now up 50K. You're only losing 1.5K you spent buying them, now 500K for Round Live account. But yeah, right, like, I mean, in simple terms, dude, if you made 2K on a 50K and you have 20 of them, well, now you made 40K.
No.
Right. So that's the crazy part. And you don't have to change anything about the way you trade. You just got to make sure that you turned on TradeSyncer and press sync. Because I fucked that up before. Some of my best days back then when I was trading only props, I forgot to turn on my fucking TradeSyncer, and then I nearly broke my computer. So don't do that. Always make sure your TradeSyncer's on. But yeah, this still sounds too good to be true. Well, it's not a coincidence because there's so many regular kids like us earning 5 to 6 figures per month in payouts consistently from trading. A lot of those actually being our students. Shout out all those goats. And yeah, bro, there's also probably a ton of people that aren't even online that you don't know about. But yeah, dude, I mean, like, you have to capitalize on this while you can. I do think prop firms aren't going to go anywhere, but truthfully, you never know. And so if there's ever like the best time to learn, it's right now. With everything going on, the amount of momentum that trading has picked up. I mean, I'm sure some of your homies are talking about trading, and just, bro, get yourself involved, get your friends involved, get into it. Same way Blake and I did. Like, we used to just fucking trade every single morning, FaceTime each other, and then go play tennis every day. Like, that's all we did for a year, bro. And that was the best time of my life. But yeah, to recap, you now know how to learn trading while working, read the charts at a fundamental level, progress from paper trading funded to copy trading. Now you need to master psychology, how to go from degenerate gambler to disciplined robotic trader. Identify your 3 weak points. Is it over trading? Is it revenge emotional trading? Is it over leveraging? This is usually one of the cases, right? A lot of this is either rooted from greed, from fear, or from impatience. That's often the 3 biggest problems people have with psychology.
This is really important, guys, that you also understand psychology. I know we just spoke about the models, but if you do not have your psychology in check, you're going to be nowhere near making this amount of money that me and Pat are making, or any of our students are making. Psychology is 80% of your trading. So make sure you guys listen to this, dial the fuck in. And I know a lot of you guys are thinking right now, oh, I don't need psychology. It's not necessary. You need psychology. You need to learn everything that me and Patrick know that we've been through because we've been in your shoes. Okay, guys? So listen. Ask yourself this question. Are you eating healthy? Are you going to the gym consistently? Are you breaking promises you make to yourself?
That's a huge one, bro.
Yeah, 100%.
If you can't take your own advice, you're never going to be a good trader, bro.
Mhm.
And that's like why trading will beat the fuck out of you. It will humble you, dude, because you will tell yourself 1,000 times while you're trying to get better, like, oh, I just need to follow my rules. I need to stop full porting. And then you'll do it again, and you'll get so fucking mad at yourself that you keep messing up. And eventually, bro, you're going to cross the bridge where you're thinking to yourself, I'm either going to quit or I'm going to learn from everything that I've done and actually start making change in life.
Yeah.
That's how it goes.
Exactly. So even if you are a trader, your issue may be discipline off the charts too, right? So type your 3 weak points in the chat, guys. Write this down, whether it's on the charts or off the charts or both, okay? Type in your 3 weak points. I want to see everyone's weak points. What are you guys struggling with currently, psychology-wise? Is it over trading? Is it external? Is it more you're not going to the gym, not eating? What are you guys struggling with that you want to fix? Gambling, super. A lot of people struggle with that.
Is super relatable.
Yep. Greed, all this stuff. These are all things, guys, that me and Pat have gone through, which is why it's so important. Like, we're going to teach you how to overcome this.
And I will say, bro, like, I'm going to be completely honest with you. Like, you're going to hear traders online say like, oh, bro, like, I'm fucking emotionless and all this. That's bullshit, bro. We're all human at the end of the day. What makes a good trader is the fact that you do build the discipline to override, to never let your emotions override your logic, right? So, dude, there's still some times where I'm going to trade and maybe I get a bit antsy or get a bit anxious. And like, maybe I'm not as level-headed as usual, but rather than acting on that, I remind myself, dude, I've done this 1,000 times. I know exactly what I'm doing. This is all just noise. I'm just going to let the trade do its thing. And that's what makes a good trader, bro. You start building that trust in a system and you don't question things. And when you feel emotional, you don't act on it.
Yep. Hell yeah. So how do you actually fix this? You have to have 3 daily non-negotiables. So this enforces your discipline. For example, you meditate 10 minutes a day daily, right? You backtest 30 minutes daily minimum. You have no more than 1 trade a day, right? And what makes a good non-negotiable is that it's simple, so you're most likely going to stick to it. For example, just making your bed in the morning, just simple shit like this, right? So rather than 20 minutes of meditation, maybe you meditate your 5, right? You can always find 5 minutes in the day for you to meditate, okay? And what else makes a good non-negotiable? If you can do it consistently, even when you're busy, okay? Even if you can just do it in your head.
So just listen, find any time you have. If you have 5 minutes after waking up, if you have 5 minutes on the bus, you can do it all. But it's not going to be easy. And that's something, it's very important. If it was easy, it wouldn't be rewarding, bro. Just know that. All right. So just make sure you do it consistently. You got to force yourself at first, but then it becomes a habit. And yeah, journaling is a great way to do it. Journal why you took a setup, why you didn't take a setup, how you felt during it. All this stuff is very, very necessary and it holds you accountable. And it keeps you self-conscious. Well, sorry, not self-conscious. It keeps you self-aware so you don't slip into old habits and you look back on your progress and there you go. So now you know all these things, everything that we've said so far. You've seen the student success. You've seen the copy trading methods, how to get paid out. You understand how to flip 500 to 10K with scaling, with copy trading, all these things. You have the routine down. You have the foundation. You've heard the success stories from students just like yourself, students like Angela. Oh, she's goated. Jel, Botha, Jonathan, all these goats that have joined our program and have absolutely freaking crushed it. And yeah, like I said, remember that the most engaged students in the chat are the most likely to win the free funded accounts we're giving away. We do have moderators looking over everything who have been helping us with this whole boot camp. So please don't forget that if you do want to win an account. But yeah, do you feel more confident that you can become a consistently profitable trader? I already know all of you guys are thinking, yes, I do. And are you happy you came to this boot camp today? I fucking hope that answer is yes. I'm not even going to look at chat, bro, because if I see 1 no, it's going to kill my vibe. And do you realize the advantage that you have paper trading, funded copy trading method that we laid out? I damn freaking hope you do because it's generational and you never know how long this opportunity is going to be around. And do you see yourself using what we showed you today to earn consistent payouts? Well, I already know your notebooks are probably packed with information and you're going to do it because why wouldn't you? I'm handsome as hell. Blake is a little bit less handsome than me, but it's all good.
That's crazy. That's crazy.
Okay. But yeah, even if you only use a tiny fraction of what we just showed you, would you say your time was well spent? I hope so too. You know, I think we gave a lot of good sauce, whether it was something you already knew or just reinforced. You know, I'm confident that what we said is important. Would you like to spend even more time together going over deeper and further on how to become a self-sufficient, consistently profitable trader? Here's the thing. If you don't implement the topics we went over in the bootcamp, nothing in your life will change. You need to take action. Think about what you really want. Maybe to quit your soul-sucking job or drop out of school. Maybe to retire your parents. Maybe you want to travel the world, bro. Maybe you want to just buy guitars like me. That's all I really care about. But everyone's freedom is defined differently. And like it says, it can all be yours. But the truth is, you know, you've seen that we've regarded as some of the best trading educators on social media from other people. But yeah, even if we spent 4 more hours together on this boot camp, it probably wouldn't be enough to create lasting change in your life.
Hell yeah. So what we gave you today, guys, was valuable, right? And I want to emphasize that this was just the tip of the iceberg. There is a lot of sauce that there's still left to give you guys, but we've covered pretty much everything in just 2 hours. For those of you who said you want to go more in depth with us, you'll love what we have next as a New Year's little surprise for you guys. Who's ready to see this New Year's surprise? Put some W's in the chat for that. Okay. What if you had access to a system that takes you by the hand and walks you step by step through our 70% win rate models that has hundreds of students using to get paid out consistently every single month? We have you get held accountable with us by your side. We have one-on-one coaches, an accountability partner, and hundreds of other traders on the same path as you, and equips you with all the tools that make failure nearly freaking impossible. Okay, this is the same system that, again, that's helped everyone I've shown you today change their freaking lives. So huge. And when we were making this boot camp, we had 2 choices. All right, the first choice was drop a ton of sauce. That parts ways for you guys to implement it. All right, we just dropped straight sauce, literally like insane amount of sauce in under 2 hours. Now, choice number 2, we play a more active role in your trading journey. Right, rather than you pulling up to this boot camp and then we never see each other again, which would be extremely sad, and we don't know if you've implemented what we gave you or not. We chose option 2, which is to give you guys the opportunity, everyone in here, to work with us hands-on, okay? To go more in depth together in a more intimate setting.
What do you mean by intimate?
You know, so we're going to drop our OnlyFans link. We answer your questions along the way. We stay in your corner every step of the way on your journey to consistent profitability. And when you see what we have in store for you, you'll be glad we chose option 2. So introducing.
What the heck? Is that AI?
It's AI. Me and Pat, the New Year's edition, the Christmas edition. Whoa, sorry, edition. This is what you get, okay? Holy sauce. I know it's a lot. Let's break it down. All right. Break it down.
Yeah, so we got a bunch of stuff, daily group coaching calls. I want to emphasize that these calls, right? It's group calls, but with embedded one-on-one. So the way I do it is, bro, I know everyone learns different. And this is what I've learned throughout my time teaching other people. Some people don't like to ask questions. Other people like to hear what other people are asking. Some people love to ask questions and other people love one-on-one shit. And you get it all in these group calls, right? So Blake and I will spend time going over the trading day, questions people have. And we can also bring people up on stage and do one-on-ones, which I think is fucking great because anytime I help someone out, other people can hear it out as well. And then for people who just like to listen silently, they can do that too.
Yeah.
There's people like that. I'm like that, honestly. But you have also trading A through Z in-depth video lessons. So for all those who are more on the beginner-oriented side and you want refreshers on all the basic information, we created it all just for the mentorship students as well. Before we get into like the more in-depth stuff, you get a one-on-one onboarding call plus a trading plan made for you, right? So there's a lot that goes into this. Shout out Ronan, Goat Ronan, shout out Santi, Goats. I love all these guys. We have a great community, bro. You know, everyone obviously is very serious in there, which is hence why the results are so good. But people are also fun, bro. You know, like it's not too robotic and full of losers. Like you're gonna meet people that you'd probably want to be friends with in real life, and I've met plenty of them. I've taken a couple shots of tequila with a few of them. I will say, hey, bro, don't get mad at me. But what this is, and it's not like a static course, right? It's really just a whole program. There's a lot that goes into it. It's not basic information you're going to find just on the internet. And it's not just another guru selling you the dream, you know, beyond just making you better traders, we're going to make you better people. So it's hands-on accountability and coaching, in-depth information that can't be found anywhere else. And two cool ass dudes who came from normal families, spend thousands of hours behind the charts, reach consistent profitability, and are helping you do the same damn thing, which is why we put our own skin in the game. If you don't get your first payout on 12 weeks after joining, we'll work with you until you do. Right? This is huge, bro. We want to make sure you guys do get there.
And the reason we can make a guarantee like that is because of the freaking results that we have in our community. It's absolutely insane. So we are making that guarantee, okay? And you're now at crossroads. All right, you have three choices. Choice number one is you do simply nothing. You leave this boot camp and you do nothing, okay? Your life stays exactly the same. You make no change. And hopefully nobody in this chat here picks choice number one. Okay. I don't want anyone here to even think about that decision. Or choice number two, you take action on our free info. We just gave you straight sauce for 2 hours on free information. We give you sauce every single day, almost every single day on our YouTube channels, right? We are constantly giving you guys this free info. And if you stay 100% committed, you'll still probably reach your profitability. 100%. You will. I've seen it. I've seen it so many times with people, okay? But the question is, how long will it take? Will it take a year? Will it take 2 or 3 more years, right? We've met some traders who've been stuck unprofitable for over 5 years because they haven't picked one model, one mentor to stick with, right? And they just completely, get out of the loop. Or choice number 3 is get one-on-one help, okay? Take the leap, invest in yourself, and believe in yourself. And I hope you guys take this freaking leap, or take choice number 2, right? Steal the thousands of hours we wasted failing in the markets and cut that time in less than half for yourself, bro. I'm telling you, I spent, a year and a half of straight hell trying to learn this shit by myself, where I had no accountability. I had no one trying to, lead me to any direction. And me and Pat have built this boot camp.
That's 3 years of refinement together, bro.
Yeah, dude. And we have built this mentorship where we have now seen people, bro, getting paid out within 6 months, 3 months. And that's just because we've kind of cut that, what's it called? Straight to profitability, basically, right? And we're going to go into 2026, finally achieving the New Year's goal of financial freedom you set out to achieve last year.
But yeah, if you chose number 2, good luck. We'll be rooting for you either way and doing our best to push out the most valuable free YouTube content ever. So please make sure you subscribe, because we put a lot of effort into those. And if you chose 3, thank you for trusting us. We'll do everything in our power to make sure you get a return on your investment working with us. Now that you're ready, click the button on your screen to apply, or go to www.pbtrading.io/apply-bootcamp.
Hell motherfucking yeah. W's.
Can they even click that button? Is that possible?
Can you guys click the button?
We just drop it in chat.
Yeah.
Make it a sticky note.
Yo, Ray, drop that in chat.
Here.
How do you do it?
Bang.
Command C.
Copy.
And then you go Command V.
Send a sticky message.
Oh, sticky message, eh?
How the hell you do that shit?
Oh, no, it's kind of confusing.
Whatever.
Send that. How do you try to pin that? Can you pin that? Oh, wow. Marcus highlighted. I don't know.
Yeah, that's fine.
W's in the freaking chat. Hell yeah, boys. How much we have left? So. Let's see. Hey.
But yeah, you're going to fill out your application on this page. Claim your New Year's gift. We built something super cool for the New Year's and stuff. And just a lot of stuff we've been working on to always improve everything. But make sure you do this application. Watch this after you apply. This is incredibly crucial. Our team will call you shortly after you get onboarded. Our area code will come from a major city in your area. But
hell yeah. And once you applied, comment, I'm in. All right. I want you guys to comment that in the chat. If you've applied, comment, I'm in. All right.
I want to hear everybody fucking say that, bro.
Let's rip it. W's in the chat.
Also, anyone who's asking about pricing and stuff, when you speak with our team, they'll propose you different plans and ideas. So it's not like one set thing, right? It really depends what you're looking for, and we'll try to accommodate to our best of our ability. So just make sure you apply. Make sure throughout the interview process you're very honest about your journey. We hear back from everyone on our team about everyone that joins. And the more honest you can be with us and our team, the more we can help you. So please, please, please don't go into any of this bullshitting. We want people who are going to take things seriously and actually be willing to change your life. If not, not only are you going to waste your own time, but you're sort of going to waste our time. We want people who are fully committed. But yep, there's more. This is a cool bonus, bro. We've trained this crazy AI on, what is it, over 5,000 hours of content or something.
Yeah.
But it's like the craziest thing ever. This is just like an extra on top of everything. And it knows literally everything Blake and I know. And bro, people in our mentorship love using this shit and asking a question, psychology based and all this stuff. But try it out. Super cool.
It's crazy, guys. You don't understand. I've had mentorship students ask me a question on call. I will answer that question, and it's like a complex question. Like, if this SMT happens here, blah, 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 I'll answer it. It will ask the AI that question, and then the AI will literally say my exact answer. It's scary. So you can literally DM this if you want like immediate responses.
Me, bro. It talks too much like me, bro. I asked it a question one time, and I'm like, this shit's responding like that. Whatever. But yeah, it's definitely a fun thing to use. But yeah, bonus 2, weekly trade breakdowns. We do a lot of this in the calls. Accountability groups is very important. We want to make sure you guys are always accountable. Priority access to PB, which is awesome as well. And again, click the button on your screen to apply, or go to www.pbtrading.io and apply -bootcamp. Act fast. Our team is only so big, and I'm being very honest with this, right? Like, we don't have like the largest team, especially because we don't do an event like this or shit like this very often. So it's very important that you do take advantage when we do stuff like this, especially if you're someone who's very eager to get in. The sooner the better. But we're not gonna be able to accommodate to everyone, and that's just a reality. So please, take advantage. And yeah, I mean, we have our onboarding new students filling up, and our coaches and everything. So let's get it, boys. Act fast. Within the next few hours, we'll likely be completely booked out for the next 3 days. And that's just the truth. And the truth is also not a lot of people are going to get accepted, but hopefully everyone does.
Yes.
To be honest. And yeah, so the cost of inaction. Why'd you join this bootcamp in the first place? What are you working towards? The freedom to work for yourself, the freedom to travel across the world whenever you want, the financial independence to take care of yourself and your loved ones. I can say for myself, bro, I wanted to just spend more time with like my mom, my dad, my brother. And that's probably the biggest blessing I've ever had that I got through trading. Like nowadays, dude, if my dad fucking hits me up, he's like, yo, let's do this. Let's do this. I always get to hang out with my dad now, or my brother, or my mom. And that to me is something I could never put a price on. But that's the type of freedom that trading allows you to have, right? So it's different for everyone. Maybe you want to travel. Maybe you want to fucking, I don't know, invest in your hobby. Mm-hmm. It's completely different for everyone. And it's important that you figure out what that route, I guess, causes. But yeah, where was I? Right here. So what are you running away from is also important. Is it a shitty boss? Is it a dull, monotonous job? Feeling complacent, normal, and stuck in the traditional path? If you feel any of these things, bro, I really hope you're making change. You don't want to be the person that 40 years from now are getting Steve.
Sorry, I'm getting Steve.
People are saying I look like my brother now too, which is always funny. If you're someone, bro, who just like isn't satisfied in the position in your life, and you're self-aware of that and you don't make change, that's not good, bro. You don't want to be the person that 40 years from now you look back and you ask yourself, why don't I just take a bit of risk? Because at the end of the day, bro, none of this is going to be too big or too major. You're just investing in yourself. You're trying to make a change, and that's what's fucking matters. So what happens if you stay where you are? How much longer can you bear the current situation that you're in? What happens if you never escape? We can't answer that question for you. Only you can know how desperately you do or don't need to get out of the current situation. I know everyone's situation is different, and I'm not here to speak for anyone else. But if you're ready to take action, this is the place to be. This is a perfect time to change your life going into 2026. To recap, you get daily calls with me, Blake, Ronan. You can get in-depth questions answered in Steel or years of experience. Steel is a bit here. Don't say Steel. Come on, more like learn.
Yeah, I guess we'll learn. Yeah.
Why are they stealing it from us, bro? Like it's guru. But yeah, you get the one-on-one onboarding call, personalized trading plans. You get a handheld experience and tailored roadmap for your exact situation. You get the trading A through Z videos for those of you who are on the more beginner side and want just all the foundational breakdowns. And you also get, also wasn't written here, but you get all the specific recently created mentorship content, which is model breakdowns, daily bias, strong liquidity, discretion. I just put out a crazy lesson explaining discretion and how to build that, which is, you know, it's really hard to do that lesson, to be honest, because it's not something you can necessarily teach. But I did do a pretty damn good job at that, I will say. I got some gnarly lessons in there. So you'll get that. Of course, you got the AI that we talked about. You got weekly trade breakdowns. You got direct access to Blake and I. And now for an FAQ. Yeah, we do help with break-even stage. We help with everything. As far as the price goes, like I said, speak with the team. They accommodate to different people for different things. It's, you know, there's a lot of plans. So, but yeah.
Let's do it, boys. Let's get some Q&As. I know a lot of you guys had questions beforehand, but let's keep it going. Let's go. And please, guys, don't spam. I do see all of your guys' questions. Okay. So any questions that you guys may have, write them in the chats. Let's do it. How do you know which fair value gap to look for to retest? That's a really good question, right? To look to retest, right? If we're looking at fair value gaps, I'm going to just get out my trading view chart here, okay? It has to be aligned with your bias, okay? So, for example, the trade I took today, right, this short, the trade I took today, I was looking at bearish fair value gaps. So if I'm bullish, I want to see price bounce off of bullish fair value gaps. If I'm bearish, I want to see price bounce off of bearish fair value gaps, right? If we look here on the 15-minute time frame, we are, or sorry, the 5-minute time frame, what are we bouncing off of? A bearish gap. So I want to be looking at this because we're bearish on the higher time frame to take my trade. So
pretty simple. Like, it's always, you want to look in correlation to what the narrative that you're building. So if you're bearish, you're going to look for 5 or 15-minute bearish gaps. If you're bullish, you're going to look for bullish 5 or 15-minute gaps. But you don't want to overwhelm yourself and mark out a bunch of shit, right? Stay corresponding with your narrative at the whole time. Can you join if you're 16? Absolutely. I actually have a bunch of people in there who are between 16 and 18.
Quickly though, guys, I want to just first get all of like the basic questions out of the way, because we do have a couple of just basic questions that I know a lot of you guys in the chat are asking right now. So first off, how long does it really take to turn profitable? Okay. For me, right, it took me about a year and a half. So a year and 6 months to turn profitable. Pat, it took him about a year, a little bit. I mean, to get consistent profitability, it'd probably say like a year and a half, right? And this is really, really crucial, guys, because psychology is so important, as well as learning the strategy is so important, right? So when I teach people a strategy, it doesn't take more than 3 months to learn a strategy. To really dial it in and like understand, I would say like 3 to 6 months to actually learn the strategy. If you have your psychology down from the jump, bro, you can become profitable right after that, 3 to 6 months, and that's all you need, right? But if you have psychology issues, which is why I was explaining why psychology is so freaking important, then it's going to take you a really long time to become profitable. But for me, it took me about a year and a half, even after I already understood all of the freaking psychology issues, right? Or sorry, the strategy issues, right? Which is why we give you guys accountability partners in the mentorship. So you guys are getting held accountable by everyone. So you literally can't break your rules. I'm going to be on your ass. Other people in the server are going to be on your ass. So you're not breaking your rules. So that's really sick. Next question that we get a lot is, how many hours per week do I need to dedicate to learning trading at first? So I would say, if we're just looking at it like this, right? 9:30 to 11, that's 2 hours out of your day. I would probably say like 3 hours for actual trading, just because you need to be trading, you need to be doing your analysis, and then you need to be journaling. So 3 hours there. Then you need to be back testing at minimum a week of data per day is what I tell everyone. That's around 4 hours. And then watching some content, I would say maybe pulling up to a Q&A call if you're in the mentorship. That's just an hour. So boom, I would say 5 hours a day at minimum is what you need to start learning trading. And yeah, that's obviously a lot, guys, also at first, but I want you to know, like, this is where you're going to be putting in that work, right, at the start. And then nowadays, dude, I'm not trading for more than 2 hours a day. I'm not really like journaling for more than that. I'm not backtesting anymore, right? I'm really just dialing it in now so you can have that freedom later on in your life, okay? Another question I get asked a lot is, what makes our strategy unique? I think what makes our strategy so unique is the way that it's so applicable for this current state of trading with prop firms, how we trade, one-to-ones, how we're really aligned with all of the rules that prop firms give you. And it's really digestible. I mean, as you guys saw, probably a bunch of you guys are a little bit confused, which is completely normal. But a lot of you guys are definitely like understanding the basic concepts, which is just price trades from liquidity pools to fair value gaps, and you take trades based on the bias. Like that's really all it comes down to. It's really that simple. So that's why I think our strategy is so unique. And how do I know if PB strategy is for me, right? So this is a really good question, guys. How do I know if the strategy is for me? If it makes sense in your head, that's what's really important. For me, for example, I didn't understand like support and resistance. I didn't understand VWAPs and, why price is moving from the 40 EMA. And I started learning that at first, right? I started trading options and shit, and I started learning that at first. I had no idea what any of that stuff meant. But I understood why price seeks liquidity, why price trades imbalances, because we need to rebalance the market, why we need to trade with the trends. And all that stuff made sense in my head. So if that's you, if you understand that, then perfect. That's how you know your strategy is for you, or our strategy is for you. And why should I invest in a mentorship when there's so much free information online? This is a great question, right? There's obviously a lot of free information online that we give a bunch of sauce for. But I think with the mentorship, we obviously give you the accountability partners. We give you, the course structure. We give you like a whole entire roadmap and game plan for a trading plan that our coaches give you. So I think that's really, really crucial that you guys get that help if needed. But of course, you guys.
The most important part is that I'm in that shit, and you get to talk to me, and you can tell me about, if you went through a breakup or something, or if you have a question about the model, bro. I'll talk about anything that asks, yo. I'll even play Arc Raiders with you if you want to play that, yo. Like, I'll do anything.
Type. And you guys get to talk to us online, right? And we can help you with whatever problems that you're dealing with, like psychology wise, strategy wise, and you kind of get that one-on-one help. So that's really, really important. I think it definitely speeds up your process to profitability. But of course, right, I've had people become profitable with the free information online. That's not to say that our free information isn't there. It's definitely there. It's just to speed up your process. I think the mentorship is goated for that. So who are PB's coaches? Who is Ronan? This is a great question, right? So Ronan is our fucking GOAT, right? So this guy, he was in our VIP Discord, right, back in the days. And he joined and was just like you guys, unprofitable and had no idea, anything about trading. And then he joined and he learned the model beautifully. He started banging out 10K months like it was nothing. And we said, yo, Ronan, you want to teach people how they can do the same thing? And he was like, yeah, for sure. Like, really, really great freaking teacher, man. And I have nothing to say but like the best for him. He's a great mentor and he's the GOAT. So shout out Ronan. He's going to be helping you guys a lot in the mentorship. And just know that even though it's not me and Pat, like he was in the same exact position that you guys were in. So he understands like all of the problems. He understands like all the problems that you guys have with the models if you're not understanding something.
Yeah.
So he's there to answer those questions.
And it's also like you're going to have calls, twice a week with me, twice a week with Blake, whatever. You're going to have a bunch of calls with us throughout the week with me and Blake. But for the times, like, let's say if you join up one of our calls and I answer your question, whatever, but then after the call, you're like, fuck, dude, I feel like I still want like a refresher on this. Then you can join the next day on a call with Ronan, right? And we have calls every single day except Saturday. But we have calls every single day. So there's always an opportunity to ask something and just get help.
Hell yeah. Yeah. How do I know if I'm really cut off for trading?
I mean, bro, the reality is there's only one way to find out. Like that, I think that's how life is. Everyone's capable of trading, but it's really truthfully like, are you disciplined enough to make change beyond just like the charts and stuff? Like, are you willing to actually make sacrifices in your life to be better? And that's what it takes, dude. But ultimately you're never going to know the answer to like these questions unless you try. And you need to be okay with uncertainty and you need to be okay with taking risk. That's what life is about. You know what I mean? That there's literally only one way to figure out. That's the reality. And then what should I do if my friends and family don't support me? Well, trust me, it's very unlikely your friends and family will support you with such a low success rate and it's such a difficult skill, bro. Like, you can't listen to it, bro. It's noise. My parents didn't support me. Blake's parents didn't support him. A lot of my friends thought I was a fucking idiot. Dude, like, eventually you learn to not give a fuck. Because at the end of the day, you're doing something that makes you happy, and that's all that matters.
You guys just have to understand that, like, your friends and family at the end of the day just want the best for you. So they're not going to say yes to a skill that takes a lot of you going through hell for, right? They don't want that. They want you to, go through a clean path of life of going through school. And bro, for example, me, I had a computer science degree, right? Or I was aiming for a computer science degree. And I was in school, and my friends and family were all telling me, go through that. Like, you're going to have a great job in the end. And, don't do trading. It's too risky. And I was like, man, like, all right, maybe they're right. But then I was like really thinking to myself, like, no, I want to do this high income skill. I want to learn trading. I want to get that reward. And thinking back, if I would have stuck with computer science, I would not even have a job right now. That job market is completely cooked. So I just had to say that. But yeah, do what you want with your life, bro, man. You have the fucking opportunity to make that change right now. So fucking go after your goals. Go after your dreams, man.
How much money do I need to get started trading? Truthfully, you don't need too much nowadays with prop firms. I'd say if you have, $500 to $2,000-$3,000 laying around that you're willing to put into props over the course of a year, you could be pretty good with that, to be honest.
Yeah.
So you don't need a lot of money nowadays. But yeah, back to the little Q&As. Focus more on like the psychology questions. Sure. Yeah, you can do. I have people who ask me questions in Spanish all the time. It's really funny because I'll have some dude like just start like talking to me in Spanish, and half the people in the chat don't understand what the guy's saying, and then I'll be like, guys, this is what he was saying. But yeah, no, you can speak to me in Spanish. You can ask me shit in Spanish. I mean, I have honestly a lot of students who do that. I'm totally fine with it.
What is still the most common mistake advanced ICT traders make? This is a great question, and it's why I taught market structure at the beginning of this. It is simply not trading with the trend. I see so many advanced ICT traders still to this day trading against the trend, and they get super zoomed in on the really, really lower time frame, and then they zoom out, and it's like, oh, this is a completely opposite trend. Like, I should not be trading that. So always, trend is your friend. Trade with the trend. Okay.
Yeah. Also, the big thing I see is like how do I know if a trade is good? Well, the thing is, you need to base it off facts. Your only goal is to trade off high probability setups. Like the way I think about it, right, is there's a couple of things you look for. Is time aligned? Are market conditions good? Is there good volatility? Shit like that, right? And I always make analogies, like stupid little analogies. It's like the same way if I told you, bro, like, okay, if every day between 9:30 to 11 a.m. you left out fucking bird seeds on your windowsill, and if the day was sunny and the temperature was like 70 degrees, then there was a 70% chance that the bird would show up and eat the seeds, right? And so it's like, if you follow those set of rules, if those foundational, I guess, like concepts are there, then, and you do that every day, then, 70% of the time, like the bird will show up. But if one day you're like feeling kind of greedy and you're like, oh, I'm going to put the fucking seeds out earlier than usual at 7:30, right? Then now you've dropped the probability of like the bird showing up despite everything else being there. Or maybe one day you put them out, it's 9:30 to 11, but it's not a sunny day, it's rainy. And so now it's not a 70% chance of the bird showing up, it's a fucking 40% chance. And it's like all those things matters. You need to have foundational facts that are supporting the narrative of every single idea that you build, every single trade that you take. You need to create ideal scenarios, these A+ scenarios in your head. And when they present, you execute. And that's what we teach you to do. We teach you to build narratives, right? High probability narratives.
I know Peasky.
CFD versus futures, ZFU futures, just better volatility in my opinion.
Yeah.
What helps me with psychology personally? It's just like, there's a few things. I think a big thing is doing stuff that makes me uncomfortable. Stairmaster, I fucking hate. So if I tell myself like I'm going to do 15 minutes on the Stairmaster today, I make sure I do it at least 15 minutes. And that makes me feel good about myself. That directly translates. If I tell myself, oh, I'm going to, follow my rules today trading, then I'm going to do it, right? Like I'm consistently putting myself in situations where I have to follow or like take my advice or actually listen to myself, which translates directly to trading.
Yeah, you should get a confirmation email after submitting your application. Check your spam folder. It sometimes goes to your spam or the promos. But it also redirects you to a confirmation page. So yeah. How long do you guys trade? So again, we trade from 9:30 to 11 a.m. Eastern. That's really it. Like that's my cutoff time. And to go back to what Pat was saying on like how to handle like psychology, what's the best tip? The best tip I'll give you is to like have a schedule around trading. So right when I'm done trading at 11 a.m., I have to do my shit. I have to do a call. I have to go to the gym. I have a lot of things in my day that I need to be doing. So immediately I don't have time to, keep sitting on the charts, keep checking my trading. Like, no, I'm done. After 11 o'clock, maybe if I'm still in a position like today, for example, I have to manage it a little bit. But that's really it, bro. 9:30 to 11. That's all you need. 2 hours out of your day, an hour and a half, bro. Not even. Guys, please don't spam. What did you trade today? Yeah, I'll just like quickly show you. I took a short on NQ.
The bias is neutral. What do? Play it off 5 and 15-minute time frame for value gaps, or just not trade at all, to be honest. All right.
Yeah.
Bias is good for a narrative, but if you're neutral, then you just got to look at the most recent thing that you're bouncing off of.
And look what we did right after. Sweeping sell side liquidity, guys. Remember we just talked about this? Boom. How would you go about passing evals? Good question, right? So if you're in the eval stage, guys, especially as a beginner, take it seriously. I don't want you guys rushing the process with evals because you need to start building on that mental muscle and that psychology. It's a muscle at the end of the day, right? The more you build on it, the more you follow your rules day in and day out, you will start applying those same rules to when you're actually on, your funded account. So definitely just lock in on your psychology in the valuation stage.
Yeah, the concept of buffers is pretty much like, the whole idea is you want to have a wiggle room pretty much in your accounts before you take out payouts, because what happens is when you take out a payout, not only do you have less leverage in the account now because you have less money, but usually what happens is your max loss limit is like, let's say you're on a 50K account and you run it up to 53K and you take out 1.5K. Well, now you only have 1.5K left on the account to trade with, right? Mm-hmm. You don't have 4%, you have 1.5K, which is it's very little. It's pretty easy to blow the account now. So ideally, before you start taking out payouts, you want to build like, I would say a 4 to 5% buffer. And so anytime you take out a payout, you still have at least $2,000 to $3,000 left in the account. And that allows you to continue trading comfortably, while still building profits and securing payouts pretty much, right? So I'd say have at least 53K in the account. And, if you get to 54K, 55K, pay yourself out the 2K or the 1K above the 53. Mm-hmm. And that helps you stay consistent and not blow the account.
How many trades do you take per week or per month? So it really depends on like the month. For example, this month, I was very, very low risk this month. I did not take a lot of trades. Just because of Christmas, New Year's, volatility tends to be a little bit worse. For example, I took this trade at freaking 10:30, man. I ended it at like 12. So volatility is not the best, but when I see my A+ start present itself, like this is my first trade in a week or something. So yeah, I will take trades typically around 3 to 4 trades a week. No, like 2 to 4 trades a week typically is like my average, sometimes even 5 trades a week if every single day presents a setup. But it's not like what you guys should be focusing on. What you guys should be focusing on is your model there? Is everything in my rules that I want to see happening, right? Did we hit a higher time frame key level? Is this aligned with the bias? Do we have a valid liquidity pool here? If all the answers to those questions are yes, then boom, take your setup. That's it. What's a good risk to reward? Another great question, right? A good risk to reward is typically like 1-to-1 I'm aiming for. If it's a fat trade like this and really like my draw on liquidity is here, then I'm aiming for wherever the draw on liquidity is, right? I don't have like a set risk to reward, but it's typically anywhere from like 1-to-1 to max. Like I'm aiming for like 1-to-4s. Can you explain risk management and funded versus evals? Another question. Again, I just answered this, but just literally, guys, focus on 0.5%. So focus, for example, if we're on a 100K account, right? 100K evaluation, right? Risk $500 every single trade. So this is sauce. $500 a trade. This is 0.5%. Okay. So risk this amount every single trade, meaning what? You have to take 6 losses in a row before your account actually gets blown, which is, if that's happening, you are just not trading the model correctly. And that's just a sign that you need to put in more work during paper trading stuff, right? So you have up to 6 losses here to blow your account, which is, again, very unlikely, but it's a great rule of thumb here. I always give myself around 0.5% with whatever evaluation I'm trading. Whether it's a valuation or a funded account, especially as a beginner, bro, remember that. Trade it the same way.
How do you trade higher time frame ranges like opposing higher time frame for value gaps? Well, you look to see where the liquidity is being generated on the lower time frame. It's as simple as that. And then you trade in correlation to that. Someone said, what makes you high conviction in certain trades you take? Well, if it checks off everything that we like to see, if the volatility is good, if we have the market structure that we need, all that stuff. Guys, everyone asking about pricing, please, when you apply and you speak with the team, there's different options for things. So they'll talk about that. Have you ever felt like you should be winning, but you just keep missing out due to dumb mistakes? That usually is rooted from FOMO or like hesitation, which means you're still lacking conviction. And the easy way to do, I mean, listen, bro, you're going to go through all these like things when you're trying to get better and you're trying to become profitable. There will be a time where you're over trading. There will be a time where you're too scared to trade because you just went into like you just had a losing streak. There will be a time where, you know, you're kind of doing everything right, but you're under risking. The point is, you're always going to be going through some bullshit until eventually you force yourself to break the cycle. You break the fucking bad habits and you start actually progressing and making change, bro. It's the same way as going to the gym. You're not going to see results after the first week of you lifting. You're not going to see the results after the first month. But if you do it every day and you do the lifts that you have to do and you embed it into your routine, after 3 months, 4 months, 5 months, you're going to look back at yourself and be like, damn, I'm jacked now. It's the same fucking way with trading.
Yep. Sauce.
Yeah, I mean, taxes, bro, it's pretty, like, realistically, you just incorporate yourself as a business, you know, try to write off as much as possible. Listen, like, you'll cross that bridge when you get there, but once you start making money, you'll hire an accountant who will literally do everything for you. And an accountant is not expensive. I actually was speaking with the students last night. I'm going to bring in someone who goes really in depth to that for the mentorship. Yeah. And just like how to minimize taxes and stuff. So we'll have a lesson posted up in there in the mentorship as well. But yeah, CPA is the biggest thing ever.
Yeah, I got a CPA. Also, if you're trading profits in December, try not to take out any payouts out. Wait for January for the new year. So that's like really the only tip. But yeah, I don't really deal with taxes.
Yeah, this is going to be sent to you to your guys' email, by the way. All this is recorded, just so you know.
The break-even phase is messing up my trading. Okay, if you are in the break-even phase, the only thing I can tell you to fix that break-even phase is to journal. If you are not journaling, you will never escape the break-even phase. Why is this so important? Because a lot of you guys with the break-even phase is you can take wins, right? You're taking, you know, great trades, you're taking some wins, but then you're taking a lot of unnecessary losses. If that sounds like you, then you are not journaling and you're probably not understanding your losses. So once you start understanding, you know, what you're doing right, what you're doing wrong, and you start honing in, bro, once you get to like 100 trades journaled and you can start seeing like, oh, I lose a lot when I'm trading the 9:30 candle. Maybe I wait 5-10 minutes after trading and my win rate is a lot better. Then do that. Maybe you're like, oh, I lose a lot of days on FOMC. Maybe don't trade FOMC, right? But once you can only understand your specific edge when you specifically journal. Okay.
Yeah, bro, and it's like the amount of shit that Blake and I have changed throughout our journeys. It's like we've gone through all the same shit you guys have. Like at one point, Blake and I stopped trading Mondays, bro. Like we were convinced that Mondays were destroying our profitability. Another time we were only trading like Friday fucking, I don't know, bro. Like we changed so many things throughout our journey. And, you know, eventually, whatever, full circle, I trade every day now. But for example, I don't trade PM at all. Why? And it's not even a technical reason. It's not that the model doesn't play out well during PM session. It's just that I've realized through journaling and through my experience that my psychology is shit during PM because I have too much shit going on during my day. I'm either at the gym or I'm fucking hungry or I'm doing some other stuff, whatever. My mind isn't as clear as it is during AM. So what did I do? I became self-aware of that fact. I held myself accountable and I made the change that I wouldn't trade PM anymore because I don't trade well during PM. And like, that's the type of shit that you need to like be honest with yourself about because that's what makes you a better trader.
Yeah.
Yeah, you can journal. I mean, there's things you can journal. TradeSyncer has a journal you can journal on. TradeZella has a TradeZella or whatever it's called and has the journal too. You can journal on your phone. You can journal on Notion. Point is, nice little screenshot of the trade you took, and you break down the confluences and you write down how you felt during the trade, what you felt you could have done better. Simple as that, bro. You don't need to overcomplicate it.
Yes, you definitely should get FX Replay too. Just like the basic standard plan on FX Replay. And then for TradingView, if you're starting out paper trading, get the CME data so you're not like behind 15 minutes. It's basic CME data that you get through TradingView. It's like $5 a month. So super necessary.
The NASDAQ thing going 23, whatever, 24/7. It's not going to change shit, bro. Like you got to think about it logically. When are the most traders going to be in the markets? When is the most volatility going to be induced? It's going to be from 9:30 to 11. That's just how it goes, bro. And that's something that will never change. So, you know, it's not that serious.
There's always going to be a 9:30 open. There's always going to be that injection of volatility. And what I'm assuming is going to happen, but at the end of the day, bro, like nobody like really knows. But at the end of the day, if we're just looking at like 6 p.m. Eastern, right? This is when like the Asia session starts and like the choppy volatility is. There's just going to be more of that on your chart. Okay, so that's just going to be like more liquidity for us to target. That's what I'm looking at it like. I really don't think it's that deep. It's going to make that big of a difference. But if it does, then I'm going to adapt to it. As a trader, you need to be adapting to things like this. Is there any free journaling application? Yeah. There's you can literally just use your notes, bro. You can use Notion. Notion is a great free journaling template. So yeah. So we'll answer a couple more questions here, but
we only enter off inversions.
Yeah.
The thing is, you don't know if a fair value gap is going to get respected or not. You confirm it through facts, right? Because we're not entering off a fair value gap. I think that shit is so stupid. But for example, in the trade you're looking at right now, we're bouncing off a 5-minute fair value gap. How do we know if that fair value gap is going to be respected? Well, we get an inversion to the downside off of it. So now we've turned an assumption into confirmation through facts, right? We get a tap into a bearish PD rate, and then we get confirmation through a flip and order flow, which is inversion. And that's how you build probability in your favor. And we go way more in depth with that in the mentorship. But yeah, can I get a re-show of how many people have applied already? I want to make sure nobody had any problems with it and that everything is good so far. Also, if you guys have been, feeling like the sauce is fire and you learned something, that's great too.
W to the chat.
But yeah, want to make sure we're freaking helping out as many as you as possible.
Let's go.
www. Hell yeah, boys.
Yeah, again, guys, if you didn't get an email, try to make sure that you didn't get it in your spam or your promo. And make sure you also got redirected to that confirmation page. But yeah.
Yeah, also, would be sick, boys, if you guys we just got a couple tags on the Instagram for those of you who joined. But if you want us to repost your Instagram or anything, drop a little story pic of you joining the bootcamp and shit.
Story pic of the bootcamp, and you guys will get entered into that giveaway. So five Alpha Futures accounts that we're gonna be giving away to all you guys that are active in the chat right now. And then also we'll check out some Instagram stories and pick from there.
And make sure I look good though. If you're gonna take a picture.
Yeah. Let's pick us up.
Stop copying me.
No, I thought we were doing it together.
No, you're always fucking copying.
But I thought we wanted to do it together.
No.
Fuck. My bad. You guys are funny.
But yeah, we'll answer like 2 more questions now.
2 more good questions.
Damn, I feel like we ran through like hella questions, but let me see what's going on here. It's 6 a.m. I need sleep. I trade from Australia, currently working to afford my first fund. I'm curious what key things to focus on when adjusting from paper to prop firm trading. Yeah, I mean, it's like I mentioned earlier, bro. Simulate the prop firm system with paper trading, right? So give yourself like a 50K paper trading account. Don't let yourself lose 4%. Try to make 6%. And if you can do that, that's when you switch over. But yeah. What's your thought process going into the day and how to anticipate where price is going to go? Like what you said, I'm just looking at the most recently significant key level that we're bouncing off of. So if I see that going into the market, I'm going into New York session and I see that we're bouncing off a 1-hour bearish gap, same way we had today with Blake's trade, then the next thing I'm going to look for is there something for me to target if I were to theoretically take shorts? And then I can see down here, yes, there is. There's generated liquidity down here. There's relatively equal lows. So now what I want to wait for? I want to wait for a setup that confirms that price wants to go back down towards these levels. And so I build that confirmation, right? I start with an idea. Okay, we're bouncing off a higher time frame gap. Then I go into lower time frame confirmation. We have liquidity below, so there is a reason for price to go lower. Then I go into this transactional 5 and 15-minute chart. Yes, we're bouncing off a 5 and 15-minute bearish gap, and now we're getting an inverse. That all confirms that price wants to go lower. So I'm always building a story, bro, and that's what we teach you guys to do. It's to build stories behind everything that you do.
Thank you, Aiden. Thank you. It was a beautiful entry.
Not gonna lie, this shit was so tough. I appreciate you guys on FXP and just banging out trades right now, finally getting some confidence back in the markets. Fuck yeah, bro. Also, a lot of people underestimate the power of taking a break, bro. Like if you feel like your mental or like your psychology has been pretty shot, then like, dude, take a couple days off. That factory reset for your brain is so important, bro.
Yeah.
No, the strategy won't stop working. That's a stupid misconception.
This is the thing with like alpha decay. I know a lot of people are like hearing about this now. Like, oh my God, alpha decay means like strategy stop working. What that means, what alpha decay means is that the market is constantly evolving, right? New liquidity is getting injected every single day, meaning it's not going to be the same exact setup every single day, right? Which is why you have to be journaling. I'm constantly journaling every day. I'm constantly refining my model. You guys see in the trade recaps, if I take a loss, I am thinking about that loss. I'm like, what did I do right here? What did I do wrong? And what can I learn from this? Sometimes it's nothing, but sometimes it's something that's crucial, right? For example, like Pat was saying, bro, like a year ago, I was not trading No News Mondays. But then I started refining my edge, refining my strategy, and found that No News Mondays can actually be great for my trading.
Bro, so much has evolved. Like, it's little things, but those micro adjustments make such a big difference. I used to focus on super heavily with equal highs and equal lows. Nowadays, I don't even fucking care about them. Right. I used to focus a lot on what else, bro? Before, I wouldn't really pay attention to 5-15-minute gaps. Then I created a whole theory around them and how to build like conditions and shit off of them. Back then I used to focus on previous session highs, previous session lows. Nowadays, I don't care about previous session highs, previous session lows unless it's inside a key level. And so you start building more confirmation, more narratives. You start adapting your strategy to market conditions and what you notice as you go, bro. And I think that's like the beauty in our strategy. It's continuing to evolutionize every single fucking year, and we're always refining it. And to me, it just seems like it's getting better every damn time.
Yeah, literally, bro. That's how I feel too. I feel like my win rate's just getting better every day. But W's in the chat. Do we have anything else in the slides? I think it's all good. I think
that's pretty much it, dude. I mean, that was a lot of sauce. But yeah,
that's it.
That's pretty much it, guys.
That's lit.
But yeah, W's in the chat.
Right, I'm in. If you guys apply for the bootcamp or apply for mentorship, if you guys are in that, if you guys are ready to make the change in your freaking life, remember, change starts with making actual change. That's it. If you guys want to make a change in your life, it starts with actually putting in the effort. It starts with putting in the work. It starts with actually, taking that first step and having that first bit of faith. Bro, there's always a monkey up there, and I wish you were there to see it, bro. It's
like a real monkey?
A real monkey. It's in that building, bro. It's like
someone has a monkey?
Yes, bro. I'm always in my trade recaps, and I look up, and it's like a monkey swinging. No yes, bro. There's a monkey in that building. I know. Anyways. And yeah, so if you guys want to apply for the Alpha Futures giveaway, remember, we're just going to be checking whoever was most active in this chat. So if you guys stayed here from the start to finish, W's in the chat for that. And then also post on the Instagram stories. Tag us.
Love you guys. Please start off the year strong. Any New Year's resolutions you have, start working towards them now. It's a fucking great opportunity now to change your life. You're about to go into the new year. Imagine you dedicate yourself to your craft every single day for just 1 year. Your life will fucking change. All right. Your life will change. So take my advice, and I hope you guys have a blessed day. Whether or not you're joining the program, frankly, I don't care. As long as you learn something, that makes me happy. And as long as we're teaching you guys something new, that's fucking great. So much love, fellas. Have a blessed Monday, and we'll see you guys.
Peace out, boys. Much love. Much freaking love. Might take 50.
Yeah, just here for a little